I'm going to focus you today on how to find stocks that can double in the coming weeks. And this is kind of a bold claim, if you will, but we've been finding that it's really something where you can find these stocks that are ready to move quickly. And I started trading back in 1990, and one of those things where I immediately gravitated towards options because of how fast you can get moves in options compared to stocks. But these stocks move like options a lot of the time. So we want to walk you through that and share with you something I've been doing for a number of years and how you can start taking advantage of it. Just a reminder that everything I share with you today is for your information and education only. Nothing we talk about here should be considered a specific recommendation of buy or sell any particular investment. Of course, you know that you are 100% responsible for your own investment decisions, and Big Trends and his staff are not responsible for any trades you choose to make. Not all Big Trends products and services are appropriate for all traders and investors. And we don't provide any personalized financial, tax, or legal advice to any individual. What we do instead is we send out email and text alerts on when to get in and when to get out. We do it after market hours so you can take advantage of that on your own time. Consult your tax advisor before you do any investment that affects your portfolio. So the key points here I want to share with you today are why stocks now make so much sense. I've come full circle from going quickly from stocks to options 30 years ago to then coming back to these kind of stocks, and we'll walk through some of those major benefits of active stock investing. And I'm going to share with you, I call it stock doublers. It's something where these stocks can double, and occasionally they can also double on top of a double. So we're going to talk about how you can keep riding those big winners and still have a plan on how to get out if it's not working. You also really configure this to make trading fit your schedule now. So you don't have to worry about missing alerts intraday. We set them up so you can take advantage of them after market hours and place your orders and be ready to go for the next morning's open. We got lots of case studies to share with you here today too. You say, so why should you care? Well, if you go back to the beginning of 2019 to current today, we just updated this slide here that a model portfolio, typically we say of a $10,000 model portfolio, that we could grow it in this case to over $105,000. It'd be $95,000 in profit. And these are examples are before commissions, but one of the big benefits we're going to talk about is that commissions have gone away for stock traders, even if you're an active trader. So and these are stocks priced at $50 or less per share. We don't like stocks that are priced more than that because it reduces your leverage too much. So we're going to talk about that. And so what we do here is we're saying, look, our model portfolio allocation is to say, you know what? Don't put more than 4% of your account into any one trade. I know that sounds like a small amount. So if you had a $10,000 account, we'd be saying only put $400 into the trade. And as it grows, then you incrementally add to it and kind of take the benefit of that compounding. But that way, no one trade makes or breaks you. You get truly diversified. We can hold up to 25 positions in this portfolio, but you don't worry about too much to manage because we help do the management for you, calling out the entries and the exits all the time, never leave you hanging. So why now? Why individual stocks make so much sense now? As I just said, commissions have gone to zero. It's about 2 years ago that Schwab and Ameritrade had their price war. Schwab fired the first shot and said, we're cutting stock commissions down to zero. Ameritrade answered and said, we're cutting ours down to zero. Both of their stocks got pummeled, and then Schwab bought out Ameritrade. So it was kind of an interesting play on the consolidation in the brokerage business. But you and I get the benefit of that in that now we don't pay even a penny for a stock purchase. And so it really makes it easy to keep what you earn this way. The other big thing that happened, the pandemic has obviously caused a tremendous amount of changes. Last March when everything plunged and the market was down 30% off of its high in about 5 weeks, it showed people that, the broader stock market, just buying the S&P 500, the index as it's called, is no longer the smart way to get your stock market exposure. Because what happened after that pandemic bottom, you had this bifurcation, as it's been called, of like the tech stocks and the stay-at-home stocks, the Zooms of the world, really doing well in the pandemic. And then you had all the reopening plays like the airlines, the hotels, the casinos, things, some restaurants. Some of those that were basically shut down did not bounce back nearly as quickly, cruise ships and the like. Sure, then we got the reopening and then they did. So the key is that more than ever, you've got to pick the right stocks. So being in the right place at the right time has always been important in investing, but I believe never more so than now in this unique environment we're in as we come out of the pandemic. And, of course, there's fears about the latest COVID Delta variant and things like that. The reality is there's still going to be opportunities to make money in that environment if the market happens to drop again. The other great thing, of course, is that, of course, stocks can be easily traded in a retirement account. So your gains in a traditional retirement IRA are not taxed until you take them out, if you ever just take them out. So the point being that you can keep compounding those gains and not having to pay the tax man for potentially many decades. So that's really another powerful benefit of having a stock exposure that you can take advantage of. So I want to talk first about how I came up with this idea of the stock doublers concept, because it reminds me that, you know what, everything that we trade and invest in is based on our perception, your and mine, of what you and I think are a quote value and what's a stock that's going to be a leader for the long haul. We like their product, we like their management, we like their sector, so the key is that these perceptions get biased. They get biased by a lot of factors. They get biased by the past winners, so the past winners, oftentimes we think that therefore it must be a winner forever in the future. We know there's been a lot that have come up and come back down. This bias was never more evident than I did a live seminar years ago where I was talking about how I made money in the stock Taser. And I'm going to show you that chart back then. And a nice lady came up to me afterwards and said, oh, she would never traded it because she said, this is her belief, she said it was too far above its moving average. And I thought afterwards, I was on the flight home and I was going, I wonder if that belief is actually helpful or not, to think that something's too far above its moving average. It seems like if something's too far above its moving average, it has to come back down, right? Maybe not so fast. Actually, a lot of the testing I did, I was like, I'm regularly thankful. I wish I knew her name because I'd send her some thank yous and some extra bonuses, because it's helped make me a lot of money in how to take advantage of that limiting belief that a lot of traders have. So AXON is the symbol here now. You can track this one yourself. It was formerly TASR, but they changed the name of the company. Taser was widely used in a lot of situations, and particularly law enforcement. But what we care about as traders and investors is, sure, we know what the company did, we know what the product was. I remember meeting the management. Actually, I was at Fox News in New York waiting to go on to talk about the markets, and the management came in these long black leather trench coats. It's right around the time of The Matrix. If you watch the Matrix movie, Keanu Reeves, he had the long black coat on. They came in looking very hip, and it turned out that was after this peak here. Notice that this was about $1 when it first started to go on this first setup point here, what is this indicator on the bottom? It's what I call the percent above the moving average. Okay, so I look at a lot of different moving averages. In this particular one, I'm looking at a longer term average where I'm saying, look, if we go 100% above that average, you would think 100% above any average sounds way extended, right? But as one of my trading mentors told me, in order for stock to go from 1 to 100, it has to go from 1 to 10 first. So you need proof that the institutions are in there starting to buy this thing up. The key for me is that it's got to keep going above that first $1 level, as you see is really happening here, about 1.5 or so. And at that point, look at what happens to this. Does this ever come back down below this 100% threshold? Only after it hit its peak. This peaked just over $30. Think about that, buying it just over $1 and running it up. If you had the ability to stay with it that long, we wouldn't stay with it that long per all my testing and trading that I've done on the strategy. We would target, we bought it at $1.25, we'd sell half of it at a double at 2.5, and then we sell the final half at a double on that double, so 2.5 doubles again. That goes to 5. We'd be out at 5. So we'd be out a little early in this one, I must admit. But you can see if I was just following along on the indicator itself, you're going to have some times where you see some volatility. Then the swing would take you out at the short-term low at about $13. So you'd still do pretty darn well over that period. But the point is that that's just showed me that, hey, there's something happening here where the institutions, when they start, we all know the institutions drive the market. When they start wanting on something that's working, they're going to keep pouring more and more capital into it until it stops working. And so you really want to take advantage of that when it's breaking above there. If you saw this bouncing back, by the way, on the right side of this chart, notice how it just touched into that 100 level, but never crossed it. You would never get sucked back into it here. So this will keep me away from 99+% of the stocks out there in the major stock database, and say, you know what, I want to focus on the top fraction of 1% that's going to be the best of the best that can really have this potential to truly launch into orbit. We've had all these billionaires going into orbit. Jeff Bezos just returned on his trip. Of course, Richard Branson just returned on his. Congratulate them on successful launches and landings. But the point is that, okay, we want to have these stocks that can launch and preferably not come back down for a long time. So this launch phase, as I call it, think about it when you see a space shuttle sitting there, any rocket sitting there ready to launch, and you think of what's it take to launch that thing? A lot of fuel, a lot of energy, a lot of power. And it's got to have enough thrust to actually get going so that eventually those rocket boosters can peel off with the fuels used up, but that thing keeps peeling on up into orbit. And once it gets to orbit, it's away from Earth's gravity and it can keep coasting higher. So the coasting higher part is the fun part of trading, in my opinion, when you buy something that's working and it just keeps on coasting because the trend has been so powerful. Whether it's because of earnings, whether it's because of a new product, new management, there's usually a reason. But the point is, you've seen it. Our system picked up GameStop, it picked up AMC, it picked up a lot of these meme stocks that have gone dramatically higher, but it picks up a lot of different names that aren't being talked about too. So the key is that we need to be able to ride them at least to our target profits and not get too antsy about taking a small gain. But once it comes out of that orbit, they can fall quickly too. So you don't want to get caught up in holding on to something and falling in love with it. I mentioned stocks that can double in weeks ahead, but we've got a number of them that doubled in days ahead. This was one on one of these electric vehicle plays. Solo was the symbol, SOLO. And notice when I got my setup point as it crossed above here, I was not early. So give up the thought that you're going to ever buy the exact bottom or need to buy it a lot lower, thinking, oh, I'm buying it too high. As long as it's not way above that average, like here when it confirmed about $6, we said, look, this thing's on that launch phase here. We need to be on board this. So we bought it that next morning. You can see we bought it in the neighborhood of about 6.25, right on this red candle here. Notice that first day it was back down into about 5.5, even 5.25 range. We might have been down 15% or so on that stock intraday. And I remind people that all the time because you say, look, if you're trading just a small 4% allocation into any one trade, now your objective is just give these things a chance to pan out. So once we get our fill at say 6.25, then we would double that and say, well, then about 12.5 is where our first target is. So you can see here in 4 days, it popped up to over 13 and we're exiting in here around 12.5 and saying, thanks very much. We'll take our first half off the table. Now, what does selling half at a double do for you? It gets you your risk capital back in your pocket. It also means that, say that if this thing trails back down, this one actually did trail back down to about where we got in. If you sell the second half out at about where you got in, you still are averaging what? 100% and 0 divided by 2, that's a 50% gain on your total investment. So selling half at a double, it gives you that freedom to give the trade a chance to keep going. If it doesn't, you're not sweating it. If it does, you're happy you held on to half of your position and didn't sell it too early. So I tend to view the stock market and most things in life as shades of gray. It's not a black or white decision. And so by selling half, you're not actually worrying so much about, okay, did I get out well or badly? If it keeps going up, you're glad because indeed you had half of the position left. If it comes back down, you're glad you sold half. Maybe I'm a glass half full type of person, but I believe that has made me a lot freer, both not just financially, but also psychologically, to stay with my trades, and my subscribers really have benefited from that as well. So another one that was very quick, this is Sensonics, SENS. You see there's our cross point happening. Notice you'll see a lot of these that will attempt it before the breakout, like right at the start of the year on this one, and it did not get through there. So we don't buy it until it breaks out the next time, which is the break above that high, about $1.25. You see it popped up to almost 2, finished that day on a red candle down around $1.50. That red candle doesn't concern me, that intraday weakening in momentum, because this just had a big breakout, right? A lot of these are news driven. And you say, okay, so guess what? We want to buy this next morning's open here. We bought it at $1.60. I think the prior day's close was like $1.55. Bought at $1.60, and then we're saying, okay, our double target is obviously $3.20. Well, look what happens. That same day we buy it at $1.60, it goes to almost $3, about $2.90 and change that first day. And you say, oh man, I should take my profits and be glad with that, right? We're saying no, wait for the double on just half your position. So we sold it at 330. That's the 106% the next trading day. This is not designed to be a day trading strategy, but it's designed to be something that you can really take maximum advantage of in short order. And now you got the freedom to give it a chance to run from there. Another one that was a really quick one, Aptivo, APVO. Now note that you may or may not know these names, but a lot of times I won't know these names until my scan picks them up. So scanning is a big part of it for me. And I have a great team of analysts here actually that help me to scan for these, and then we review all of them. And you see there's the setup and then the close on November 5th above that line. So we were buying it. It was a Friday morning. I remember it well. We bought it about $21. Ran about 28 intraday, closed about 24. So we're up a little bit. Then they announced some news for their products that's positive, and you can see the next Monday morning it opens at $50. So that one was more than a double, right? If you get more than a double, you still sell just half the position at 142%, and then you give it a chance to go on the rest. So the beauty of this is that the doubling power is so dramatic that once you can double, it will truly open your eyes to what you've been missing and how you can find more of these. Now, I think it's interesting. I like to play golf. I'm using a golf example here, but I don't get to play as much as I like as I'm so busy with the markets. But you know what? There's 18 holes in a golf match, right? And you say, okay, so if you, I have a buddy who likes to bet about $10 a hole, you know, which you can add up with my game being a little less sharp than it used to be. But bottom line is that, you know, it's still a fun time. But the point is, I said, what if we just did a penny a hole? He thought I was trying to get off cheap. And I said, no, you'd be surprised what would happen. And he was, once I ran through the numbers with him. And we started a penny on the first hole. By the sixth hole, we'd be at 32 cents. By the 12th hole, we'd be at $20.48. So this is just doubling each hole the amount of the bet. What's it in the next six holes from the 12th hole at $20? By the 18th hole, look where we'd be. $1,310 we'd be playing for on the last hole. That'd be an expensive 18 hole for somebody potentially. But the point is, we stuck with the $10 a bet, but a whole bet. But bottom line is that, you know what? This is a penny double. Imagine what a dollar double over multiple times like that would be. Of course, over 18 times it would be $131,000 by the 18th time. So the point is that the power of compounding, Warren Buffett called it the eighth wonder of the world. And he should know he's compounded wealth tremendously over 50 plus years. But the point is that when you think about this, you know, it's saying we need more of those in our life, in our portfolio. And so I always remind my subscribers, don't cut your profits short. You've heard the old phrase, let your winners run, cut your losers short. And so that's what we're really after here. So with a name like Plug Power, now we get into some that, you know, have went on to their not just 100%, but then they're double on a double, which was a 300% ultimate profit target. And so you say, okay, look, this first one here, we were getting in back when the stock was around 18 and a half. And then you saw it steadily chug on up there. We needed it to get to almost 37. It did right there just before Christmas, late December. And this was an interesting one because I had a couple of subscribers who said, oh man, we sold it almost 37. I wish we'd sold all of it because it's just trended down since to 30. Notice we're never getting back under this 100% line on the bottom right. That's barely see it in green there because it's so strong, it's staying above there. So we're saying, look, you've already gotten your risk capital out of the trade. Give this thing a chance to keep going. And it was amazing how fast it went from 30 to our ultimate target here at just under 74 in about another 6 or 7 trading days. So from this perspective, the total trade took 9 weeks, but that last double on a double took less than 2 weeks, about a week and a half in trading terms. So when you think about that, you're like, hold on. So if we doubled in about 6 weeks and then, or I'm sorry, about 7.5 weeks, and then we quadrupled in the next week and a half. So the double on a double was super power, I should say, with the little drawdown, maybe call it 2.5 weeks. But the point being, you know, the speed of movement on these can actually accelerate. So you don't want to let go of a winning trade too quickly, but we do find that double and then double on a double are great targets. With Plug Power, this turned out to be an exit right near the top. You see on the end of this chart, it kind of tested it one more time. That was the top on this chart. It went back down into the 20s. So the point being that, you know, you want to be proactive. Sure, occasionally we'll leave some money on the table, but a lot of times we'll save it. In all my studies, I showed that about a third of the time it'll keep going. About 2/3 of the time, we're glad that we booked that 300% gain and move forward. So Novavax was one that went further than the 300%. Novavax, if you remember, last March was one of those early breakout candidates on names that could come up with a vaccine. NVAX is a symbol. I encourage you to go back and study these charts on your own too. It's pretty powerful stuff. So when you look at this, you say, okay, look, with Novavax, we're saying, okay, we're getting that first breakout. And in my system, the first one was a loser. So I'll show you that one here too. There's the first breakout, and then you can see my first retest is violated right in here. And that's potentially, if you're buying an option, that's potentially a wipeout. For a stock investment. It ended up being about a 1/3, a 35% loss, I think it was, on that first one. And if you then give up, you don't take the next trade because you go, oh, fool me once, shame on me. Fool me twice, shame on you, right? But actually here on April 6th, when it reconfirmed here, it was back into the high teens. And so you can see here that as it pushed towards almost $20, well, where's it need to go? It needs to go up to about 40. Notice the first move, it went up to maybe 25. Then it came back, and it came back down to about where we bought it, closer to 20 or so. And you say, oh, no, I've just given up my profits. But you can see it's not violating this green line here. If we test that green line, that becomes my new stop. Any test of the percent above the various averages here that we say, okay, look, we want to make sure that we don't violate that line. If we test it and break it, we got to get out. So instead, you see it rockets up. It turned out it gapped up, and we made a little over a double on that gap up. Then we did a double and a double. 40 has to go to 80. You say, it's not going to 80, is it? And this thing's already had a tremendous move. Remember, these stocks can keep going a lot longer than you or I would expect them to go. So if breakout goes to about 60, then you consolidate right back down to 40. So this is why you need a little patience. This is why stocks make a lot of sense in these cases. Sure, you can do this with options too, but you got to buy enough time in your options, and you got to go well out of the money typically if you're going with this. And so that's for another time, something else that we do. But basically, stocks, it's an ideal way to kind of get into understanding the strategy, having the patience to say, okay, you've already got the free trade. You've already gotten your risk capital out of the trade at 40 bucks. So it goes to 60 back to 40. You're not sweating it. Remember, you bought it closer to 20, so you're still up on that second half. But you need 80 to get to your quadruple, and then boom, there it is, hitting up there into 80. And you say, thanks very much. I'll take that money and run. So the point being that, okay, and it went higher after that. But the beauty is that you followed the system, you've taken that money off the table, and you've made an effective one. Now, one thing we will note is that, like, this is a name I'd never heard of before I traded it back in March, Super League Gaming. There's my setup point crossing that 100% threshold. It's got to close above there. Sometimes they break out and they go so big on the breakout, it went from 6 to 9, and now it was like 250% above my key moving average that I'm following. If it's too extended, I say, you know what? Let's wait until we get the next, what we call retest. Now, what is a retest? A retest is when we've been above that line, and I just mentioned, here's one where it comes back down under that line right here. That was on March the 8th. And so that low, in my book, is a low that must hold on a closing basis going forward. So you could draw a line in the sand there, just under $5, and say, you know what? It better not close under that low in a future day, or else I've got to say it's not holding like it should. Notice it did hold. So our entry in there proves to be a timely one. We were getting in at 5.25 into this retest zone, as I call it. The risk reward of this trade is really good in my experience. So you buy into a retest. If it's wrong, say it closes back at 5 or 4.75 or 4.5. Say you lose 10, 15, even 20% on a trade. That's okay versus a stock that goes on and doubles. In this case, you can see from March 8th to March 19th in less than 2 weeks. So you say, okay, that double was hit at 10.5. Turned out, and a lot of these will turn out this way, that first time we get a double, we may well get a pause after we cash it in. I'm not sure why we do catch some pauses there, but it does seem like maybe other people might be taking profits into some of that too. I don't think they're necessarily following my indicator, but basically just saying that, it maybe hits a point where people are like, this thing's a little extended. You can see maybe that's it. It's a little extended like it was back here. So maybe that's another spot to expect a pullback. So that's a possibility, but you know what? You would never want to bet against a stock like that and bet, oh, this thing's got to come back down, because these things like a GameStop or an AMC can go to the moon. So you want to make sure you're on the right side of the longer term trend, which is obviously up in all these cases. These are all bull examples. I don't go short in this portfolio. I only buy the best stocks, because the leverage truly in investing is to the upside, not to the downside. Downside, you can make money real quick. but you don't want to hang around too long. You can afford to wait with this and let the gains of compounding keep growing in your favor. This is Inovio, INO is a symbol, another vaccine name. That's why, last year was so good for this portfolio, because it did well in the first half with all the vaccine names, and it did well in the second half of 2020 with all the electric vehicle names. And you could say it was hype, and I would say there was some hype in there, but we still were able to cash in on it. So there's my first setup there at the start of March, and then the next day it closes above that high. So we're in there buying that next bar's open, and you can see this thing's going from under 10 to 20 in a matter of a couple days. So we're getting more than a double in about 48 hours on this trade. Notice it's a good thing we sold half at a double up there near 20, because it slammed all the way back down. I've got different moving averages on here, but it slammed back down to just under 10 and gave us, what's that called again? A retest. Now think about a retest for a second. If you're already in this trade, you've ridden it up and then you wrote it down, you're like, man, that was kind of a painful couple days for this stock. Thankfully, I sold half at a double, so it's a free trade for me, whatever happens. But, even if it breaks that, say, $8 level and closes at 7, and I'm out at a slight loss on the second piece of my position, it's still a gain on the total because I'd sold a half at a double. So, but look at the retest. If you're on the outside looking in, you're going, oh, I hate missing rocket ships that take off and don't give me a chance to get back on. The retests are our chances to get back on. This one gave you not just one, not just two. So there's the second one right there. There was the first one, 1 and 2. And then look, there's even a third one on this chart. Do you see it? Mid-April. Boom, right at a short-term low. Thank you very much. Back at near $8 on its way back up to the high teens, and then gradually 8 to 16 gets you a double in about 2 weeks, and you can go on from there. So the retest strategy is a re-entry strategy if you've been on the outside looking in. And so one of the things I do for my stock double subscribers, I give you a detailed boot camp where you get this training in depth, so you can see how to learn how to catch these retests, not just these first breakouts. Inovio, of course, eventually went on to the mid 30s and got us our final 300% gain after multiple retests. The big part of this whole approach here is you've got to make sure that you're not reactive in your trading and investing. You've got to be proactive. Now you could say, well, I'm waiting for breakouts. Isn't that being reactive? Well, it's being proactive and saying being patient to not just fire away at everything that looks like a possible buy on whatever other indicator. This indicator in this system literally dumps a lot of other systems buy signals and just throws them in the trash and says it has to be the best of the best. It has to be such a strong breakout that you believe, and I believe, that there's a lot more buying to come, because let's face it, institutions want what you and I want. They want to be making more money and losing less money. They want to be scoring in a big way on some of these names. Getting rid of the guesswork, getting rid of the noise, and focusing on the best of the best breeds a lot of confidence. It breeds a lot of focus. It requires some patience, but I find that patience is something that, as you build it, it actually kind of reinforces itself and becomes sort of a nice sort of a self-fulfilling prophecy. As you work your patience, you'll get more patience. So from that perspective, this approach is important. The nice thing that we do is we help control your time as far as time watching the markets, to just basically what you need to do after hours for the next morning's trading in terms of putting in your buy orders, putting in your exit orders, putting in your target profit levels. We place them as good till canceled orders. We'll show you an example of a trade here in a few. But the beauty of this is that it keeps it incredibly simple and incredibly focused. Now, one of the things that we're constantly doing, speaking of reactivity, as traders and investors, frankly, as human beings, we're always judging ourselves against where we bought a stock. We're always judging, are we winning? Are we losing? Do you think the market cares about where you bought the stock? Of course not. The market's going to do what it's going to do. That stock is going to do what it's going to do. So you have to realize that part of this is following a system and a plan and knowing that you're sticking with it and not being overreactive if it goes against you briefly. If the setup and the structure of this indicator and method still says you should be owning it, then don't bail prematurely. Give it a chance to keep going. Now, in this example with Overstock.com, remember during the pandemic, we got that kind of wave of online businesses doing well, and including Overstock. So there's our buy, and it turns out as we're getting our buy in this, it's right before a one-day kind of a sharp pullback, where quickly you're down about 10 or 12% that next day as it pops down. Notice, of course, on our indicators, we got that first setup here, and then we got our buy. Look what happens on that pullback. What do we call that? The pullback under that 100% line? That's a retest. So the retest low says, you know what? You must follow that low going forward, and don't overreact to that intraday in future days. You must wait for the close of each day. I've always liked to say that there's a lot of battles fought during the trading day, but the true war is won at the close. Did the bulls continue to hold the ball? Did the bears retake the ball? You know, who's got the lead? Who's playing offense? Who's driving this thing more up or more down? So with Overstock, we're saying, okay, we've got our stop in there in that low 20s level, and then you can see here that you know, I think it was like we got in the neighborhood about 30 and maybe went down maybe to the mid 20s that next day. So like I said, we're down, you know, 15, 17%, something like that. Okay. Well, guess what? Then it immediately bounces back over the next few days and then it's grinding on up. And notice what happens after that. It never gives you another retest, right? It goes up as much as 500% above the average here. And you say, this is just ridiculous, right? Well, it even keeps going a little more than that. How is it possible to keep going more than that, but that this average, this reading here is not higher than the last one, even though it made a new high? Because remember, the moving averages, you see them all here, they're all going a lot higher than they were before. So you can see that trail up of the moving average basically tells us that, in essence, it allows us to readjust our expectations for not just our price levels of where this thing can go, but also where the stop will eventually kick in if we haven't gotten our targets. So the beauty of this is you look at it and you say, okay, hey, we've got a situation here in which we ride this up from 30. What do we need first? We need 60. Turned out we got a little more than 60 as it gapped on up there, somewhere in this neighborhood. We're getting, call it a double right in there. What do we need from 60? You go, it's got to go from 60 to 120. Does that sound very likely? Well, you can see it almost got to 110 on that next 5 or 6 days, then popped down to about 85. Then it popped on up here to 120, and we're saying thank you very much. We're done with the trade up here at the 120 final 300% profit target. So even if it keeps going, I really don't care at that point if it keeps going or not. I've done my job as a trader and investor. You've done your job to ride it, to get the piece of it out. When you become a subscriber, you get the guidance as well about how that works and when to get in, when to get out. So let me show you some examples of like sample trade call outs. Like I said, these trades will be called out after the market close. And what we'll say is they'll be sent to all of our Stock Dover subscribers through email and also text alert to those that want to get text, which it seems to be most everybody these days. You say, okay, this is an older example just so you don't get confused and try to buy something out there right now. I'm not recommending this one here, but this is an example where you say, look, when we get an entry, it says buy to open, BTO, Workhorse Group, WKHS. This was in like the electric truck sector. I'm saying buy the stock at market. Most of my entries and exits will be at market. Why don't I put a limit price on them? Only if I'm afraid of them getting too extended at a certain level will I cap the maximum that we should pay for something. So from this perspective, it makes it really effective and easy to say, you know what? Okay, buy Workhorse at market. That was June 23rd of last year. Okay, so June 24th in the morning, we're going in there and saying, okay, we want to get into this. So you can see, as of the 22nd, we're just crossing that 100% threshold. So you look at that high and you say, okay, that high's got to get eclipsed. Why don't we just buy right there? Because there's a lot of times where when it hits just above that 100% threshold, it does stop a lot of times. So if it stops there, I don't want to buy it at the top of that range, but if it keeps going, it tells me the institutions are just pouring on the gas. They want to be a part of this. So we see that close on the 23rd, and that's when we send our alert out after the close, so we've got time to go through all of our key stocks. And then our buy points coming right off of this arrow here in the morning of the 24th of June. So notice where that's getting an entry there. It was in the neighborhood of about $7.50. It was like 742 or something like that. So so in this case, it was actually a little bit less than that, maybe in low 7. So we'll look at that next. So basically, what you see happening is, okay, say you paid in the neighborhood of about 7.25 for it. Okay, well then multiple times 2 is 14.5. So you can go over here and look at 14.5, draw a line across and say, okay, well I know my target's got to be up in here. So as it gaps up, pops in that level, okay, I just sold half at a double. And then you kind of feel bad that you see it go from 14.5 to 20, 22, right? You can't feel bad about that because you still have half your position on. you are still making money on that trade. Notice, by the way, from the 14 level where we got out of the first half, it then stabilizes and consolidates, goes through this sort of a long sideways to even a triangle kind of a pattern for a little bit, mostly a flag pattern there, just sideways for almost a couple months, right, from early July to early September, and then it takes off again. So we've held it through that second half of the position through that entire chop, because look at what the indicator's doing. Sure, after getting up over 500% on our key reading, we come back down just under 200%. Never gets back to a retest for a re-entry, but it does, that half that we're still holding needs to get filled up in the high 20s here, and you see that's happening for a 300% profit here, just under 30 bucks. In fact, once we got into the trade, we sent out this alert to say, you know what, okay, we sold half at a double a few days later, and then we sent the following alert to say, sell to close all the remainder of your workhorse group stock at 28.84. Just work it as a good till canceled limit order. So that means you can keep it out there, just sitting out there, even potentially for months, and then allow that trade to fill when it hits that target. Or if we get our exit, we would say cancel the good till canceled order and then place an exit at the market or whatever if it's time to get out of the rest of our position. So it keeps it really, really simple, really, really effective. So when you think of some of the key elements for riding stock doublers effectively, you know you've got to have a catalyst. Our catalyst is that once we get the break above the plus 100% above that key moving average, then we've got to see a future day's close above it to confirm the breakout. So when we get the confirmation, that indeed tells us, okay, you know what? This is one we need to be a part of. We will send these trade instructions out at 6 p.m. on any day where we get action, whether it's to get into a trade or whether it's to exit an existing trade. We just sent a new buy here just yesterday morning. That's one that we still like that can be bought for new subscribers coming in today. So it's really clean, and you don't worry about screen watching, sitting around waiting for a trade. Did I miss a trade? Has anything come through intraday here? You know, if it's going to come out, it's going to come out at 6 p.m. Eastern Wall Street time, a couple hours after the close. That gives me and my analyst team time to review this stuff and then fire these alerts out to get in or get out. So when we get the violation, that either if we've either gotten our target profit or if we're getting an exit that confirms underneath that 100% line, the retest, as I told you about and taught you about, then we say, okay, just go ahead and sell that at market the next morning. The key here is that the big trend is your best friend. Don't trade any old breakout. You know, I know a lot of traders that will get pages and pages of buy signals. I could buy all these different ones that are breaking out in this strong bull market that we've had. This will only find the best of the best trends, the biggest trends. So, so from that perspective, you will leave a lot of the other slower movers behind, and you're getting really the fastest and most powerful movement. You also get weekly video training from me, so it's not a black box system. I will also get you all of my rule sheets and settings. I'll talk about all the extras that you get when you become a subscriber here. I always update all of the positions, whether it's winning or losing, what to do next. So if you came in late, as I said, if you took a typical $10,000 model portfolio from the beginning of 2019, including the pandemic drop and bounce back, we'd be up to 105,000. It's like 95,111 in profit. As I said, this is before commissions, but commissions are now zero when it comes to stock trading. If you're paying anything for your stock commissions, you need to switch brokers because the broker should not be charging you any commission these days in this environment. The 4% allocation is very important. I don't want to see anybody loading up on a trade here. I want to say take that steady building wealth mentality, knowing that this will not let you get emotional. If you don't have the trade, any one trade mean that much to you, it's important psychology here, folks. Don't have any trade mean that much to you. Your job is to execute the signals to get in and to get out when you need to get in and get out. If you focus on execution and don't grade yourself or feel bad about yourself because you had a losing trade or something gaffed against you more than you thought, it's like, okay, well, violated, get out, move on. It's not going to make or break you because you didn't over allocate your capital to any one trade. And you just get enough of these over time that helps you just keep building the portfolio. So that execution focus is where you can really see a breakthrough from where you're feeling too much emotions in your trading right now. I know a lot of newer traders go through this, and you have to get to that, like, really that happy place where you say, you know what, it's about execution and saying, okay, if I'm executing, I know that over time this edge should play out. Now, what I'm going to offer you today is kind of an insane value, because usually a year of the stock doubler service would be $3,997 on my website, okay? But I'm going to go one better than that with extra bonuses. I'm going to give you not 1 year, I'm going to give you 2 years. That would be almost an $8,000 value off of my site, plus all these bonuses. But I'm going to take down you get 52 weekly video updates. That's a $497 value. You get my stock trading boot camp, where you can get several hours, multiple hours of training. That's a $297 value at least. And then my rule sheet with all the details and all the parameters and settings, that's another $197 value. All that together would add up to $8,985 in total package value. But I'm slashing that off here and saying, you know what, if you act quickly, I'm going to give it to you all in for a one-time investment for the next 2 years access for just $997. So it's really something where you say, look, what is it costing you missing one of these trades? Think about it. If you put $1,000 into a trade that doubles, you have $2,000, right? You would pay for this on one stock doubler trade for 2 years access and all the other bonuses educationally. So it gives you tremendous ability to take advantage of that. And you can see that the link we've set up for you is a little bit unique. Thank you, Anna, for posting that out here. It's members.bigtrends.com. It's not a www, so it's members.bigtrends.com. Because when we get you signed up, we want you thinking like a member and knowing when you go to that members.bigtrends.com site, /SDO24 in this case for stock doublers, and then 24. So that's an O, not a 0. SDO, the letter O, 24. You say, look, when you go to that, and you lock that in, then you can get our members access. You get an email, it gives you members access, and you can go back and start watching all of my videos and trainings that I've got in there on my members.bigtrends.com site as a new member. So something that people love to watch and rewatch to reiterate these lessons for themselves. So what that will look like when you go to that page is it'll look like this. It'll be really simple. And you probably got some questions about it, so I'm going to answer a few questions real quick before I hand it back to Anna here in 5 minutes. But basically, what I want to show you here is that, look, it's just really simple. Pay with a credit card or pay with PayPal. Check your email only at 6 p.m. Eastern time to say what new stock doublers have been established. These are stocks trading less than $50 a share. We think they can double or sometimes double on a double, and in the meantime we can control the risk. So you can get the truly upside leverage of these names. I get a lot of subscribers to say, I like these better than options because you don't have any time decay like you have with options, and you can afford to ride them out over a period of weeks, sometimes months, but basically sometimes days. The beauty of this is that it's really simple, really effective. We just ask that as you get signed up, review our terms and conditions. I'm on my 22nd year here at launching Big Trends in '99. So basically, we've been around a long time. We're legit, and definitely, I think you're going to benefit from it. You can call our 800 Big Trends line if you've got questions, or you can email our client care at bigtrends.com email with any questions there. But I want to get to a couple of the FAQs real quick. We get a lot of questions from folks getting started. The beauty of this is you can do this with a really small account. If you think about it, even if every one of our 25 stocks was $50 a share, that would cost you at most $1,250 if you got a share of each of those. Remember, given that you're not paying any commissions for stocks now. If you were paying a ticket charge or commissions on stocks, I would say I would want you to trade more. But with no commission costs, it dramatically opens us up to even smaller traders and smaller accounts that could benefit from this. And you can start training yourself to build the right habits to find the next stock doublers kind of trades. To me, that's a big part of trading success too, is that whether you're trading one share or thousands of shares at a time, the point is that you should be following the right habits of getting in when you're supposed to, getting out when you're supposed to, and that makes things really effective. Our average holding period is about a month on average. Can be a little more, can be a little less. We send these at 6 p.m. New York or Wall Street time on any trading day. Can you get them through text as well as email? Yes, on both. So we get your email address, and then you can tell us if you want to add your cell phone number in there to get the text alerts. That's no additional charge from us. You just need to make sure you have unlimited texting abilities. Most people seem to have that now. We tend to have up to, but no more than 25 open trades at a time. That sounds like a lot, but it's easy to manage with our clear alerts. We always send you exit signals. We never leave you hanging. You know exactly what to do. All the bonuses are a part of your member access. So when you become a member, you get these member access settings to get the rule sheet, to get the weekly videos, to get the stock trading boot camp. When you sign up, we'll send you a follow-up on the boot camp access for this special BOGO offer. Buy 1 year, get the second year on me. And you can also get a bonus email address that gets right to me and my analyst team. So if you've got questions on the trade or anything about the strategy, you can get those cleared up to my research and analyst team here too. So it's really powerful access there, and that's something you don't want to miss. So go to that members.bigtrends.com/SDO24 link. I think you'll find it incredibly valuable. If you have questions on options, we had a question about that. You can call our 800 Big Trends number and ask about options on these names. That's for kind of another time. The idea is that we will always have winners and we will have losers. So Kevin asked about losers. You can actually email our client care at bigtrends.com email, which is on that order page, and get all of the trades. Kevin and everybody will send you the whole trades over the since 2019, the last 3.5 years roughly. So you see all winners, all losers. So you see how we controlled losses as well as how we rode winners. So it's all there for your perusal to study, to see how we grew the portfolio over this period. These names can be volatile. Kevin says, yeah, some of these are volatile names. That's true, but that's the opportunity too. If you know how to manage volatility and harness that volatility, you can truly now be victorious over volatility and actually be thankful that you're trading these names that can move so fast.
But anyways, I just wanted to again say thank you, and I'm going to be hopping in to my presentation. And I know that we are all here to learn, and that is definitely the number one reason we're here. And to be honest with you, the best way to learn is asking me questions. I'm here for you guys, so please ask me all the questions that you can. That is the whole point. And all right, let's begin. So today I want to cover 4 simple steps to your day trading to dominate the market under any condition. So I am Marina. This is me, the trader chick. And I just want to do a really quick intro because I totally believe day trading is not all about sitting in front of the charts and getting alerts and watching the news. It's about living life. So what we do in our lives brings us and actually makes us better traders. I am Marina, the trader chick. I'm an expat. I live in Guatemala. So right now I am talking with you guys from Guatemala, and that's my family. I am originally from the Soviet Union. I am actually a refugee from the Soviet Union. And the reason why I bring up that I am trilingual is mainly because one thing I recognize with the market is that it actually has a language that it speaks to us. That if you understand it, you will be able to really, really work with it rather than trying to predict it and rather than trying to guess and all these other doubts, right? And it actually is quite simple. And I think I recognize that because I learned 3 languages. Well, the first one, Russian, I was born with. Obviously, it's my mother tongue. English, I learned when I was really tiny. So it was really, really automatic pretty much. But if any of you have ever learned a language in your older years, you'll know that there's a process that you go through. And it could be, it's a lot of practice, and that's the most important thing. But one day you'll just wake up understanding that you know it. There's no more process. There's no more translating. And it happened the same way with the markets for me. So I've been now living in Central America for almost 20 years, and I learned Spanish in my later years. I am fluent in it. And that process woke me up when I was going through learning the markets, right? I didn't realize that it was the market language that spoke to us. So today I really want to focus a lot about that. And I guarantee just understanding that, you will be able to truly up-level you'll be able to completely take your trading to the next level and under any condition. Another thing that I want to bring up really fast, like I always say, we are not the charts and the news. We are not, like, if you are obsessed with that, unfortunately, that is not sustainable. You are not going to be able to be sustainable. You need to be able to live life as well. And also, I get so many people saying to me, but I don't have a financial background. I don't have a math background. You don't need to. I was a fitness instructor before I became a day trader. I taught in some of the top clubs in Manhattan. I lived in New York City before moving to Central America. I was actually one of the very first Pilates and one of the very first spin teachers, instructors in the world, to be honest with you. So that's just something that I bring to attention because it's accessible to everybody. And I then became a travel writer. I even still have my travel site. You could still find me, my travel site. So it's all about who you are, right? And the reason why trading works so well for me is because me and my family, we travel a lot. Travel is not a luxury for us. It is a necessity, and for to be able to trade from anywhere is super important. Okay, so before I hop into the presentation, I have a free worksheet that I made for you guys to follow along with this presentation. You could go and get it right here, right now at makingofadaytrader.com. Makingofadaytrader.com. Anna is going to be sending over the replays, and once you have it, and this works with the presentation, it's literally what I use for my trading. And once you have the replay, you can go over it a little bit slower, but you'll have it. Makingofadaytrader.com. All right, so let's jump in. When you first learn any language or anything, you always start with the basics, right? That is pretty much the norm. However, one thing that I realized is when you are learning to trade, and you join academies or you start to watch YouTube videos or whatever it is, whatever path you're going on, it's rarely to start from the total basics. I'm not sure why that is, but I went through it myself. I remember when I paid a lot of money to join an academy and I got all excited to join. I knew nothing. I got to the first day of class, and one thing I was done was literally thrown into what I call the symphonic pit. Kind of like when a music student wants to learn how to play an instrument, instead of getting to the academy and starting from music theory 101 or how to hold your flute in your hand, you're thrown into the symphonic pit and expected to play along some of the top symphonic musicians out there. And that's what happens a lot with day trading, right? So I went through that and I struggled for years because I was constantly drowning. I wasn't able to understand what's going on, losing way too much money. And when I finally ended up losing over $4,000 literally in like 5 minutes, I ended up quitting because I just felt too defeated. But I couldn't stay away, right? I could not stay away. And that's the cool thing about day trading, is that we know that we could do it and we're so close to it. But when I returned, I started to look at the market from a completely different point of view. I realized I never learned the basics because every time I was asking basic questions, I was constantly treated as if though I was just born with it. I'm supposed to be born with that information, or like, how could I possibly not know that information? So that's one thing I really want to talk about. And I can guarantee you guys just go back to the basics and learn just not even learn, just review them. It will take your trading to an entirely new level. And the coolest thing about it, it's free. You do not have to spend any more money on algorithms, softwares, alerts. It's right there in front of you for free. Okay, so first and foremost, if you are day trading, and the majority of you here are wanting to day trade, you need to have a charting platform. You need to have a good charting platform. There are so many good ones out there right now that it's easy to choose. Just make sure the one that you do choose, that you could put your broker onto the interface, that you could take trades right off of the interface. Okay, super important. You cannot be a Formula One driver if you're in a minivan. It's that simple. Okay, so you cannot be a day trader if you are on Red Bull or Robinhood. Those are not day trading platforms. Okay, you need a real day trading platform. Indicators. Your platforms will have a huge array of indicators, universal, that are already part of it. Do not buy new indicators. You are just spending money just for the hell of it. Please don't do that. You have access to free indicators. I use 2 universal indicators free. Even on the lowest scale platforms, you can still find these indicators. I use the MACDs and my EMA lines, EMA, exponential moving averages, and MACDs. MACDs, they are the least lagging indicator that you will find out there. I love them, and they are free for you, any platform that you guys use. Okay, super, super important. How to understand the language of market trading. Yes, that is what we're going to be talking about today. I am not understanding, I don't know your name, sorry, but yes, that is exactly what we will be talking about today. So let's hop in. Let's talk about the markets, market movement, and the breakdown of the trend. Look, we all know deep down about there are three trends, right? We have the upward trend, we have the downward trend, and logistically, we understand that there is a sideways trend. However, the sideways trend, this is when you go back into back testing your trades, you will see right away that this is where you will lose probably 90% of your gains, if not go into a deficit altogether when you are trading the sideways market. Why? This is the exhaustion pattern. This is the indecision patterns. This is the chop. This is the channeling market. This is the sideways market. It is indecision and uncertainty. I don't care what name you give it, but this is where that uncertainty is. There is no real understanding of what is happening here, okay? And you cannot be guessing what's happening because guessing will never work, right? What we're gonna be learning is understanding when these sideways trends happen so you stay out of them and you save a lot of money. And they happen all the time, and you will be stopped out during these. And that is just the way it is. But once you understand how to stay out of them, you'll be saving yourselves so much money, okay? So here is a good example, downward trend, sideways, here you can call it a transition area, and then it changed direction. So what's an upward trend? I'm just gonna go over it pretty fast. We all pretty much know what it is. It's when each pivot is higher than the other pivot, right? It's an upward trending market, going up, bull market, whatever you wanna call it. This is where we're going to be looking for our buys, right? This is when we're gonna be entering on a long, meaning we're going to enter on a smaller price range, on a lower price range, entering on a higher price range, right? And taking in between. We're going long, okay? We're buying at a lower price range, exiting at a higher price range. What is a downward trend? It is literally the opposite. It's when each pivot is going lower than the next. And if you are day trading, you will know that going short, selling in the market is as profitable, if not, than going only for long. So if you're sitting here thinking, well, I only look when the market is trending up, sorry, you're probably not going to be a successful day trader. You need to know when the market is trending up and when it's trending down, and it's all about the technical analysis. It has nothing to do with the emotional bias. Oh, but I wanted to go up because the company has to do well or the economy has to do well. That's called investing. That's not day trading. Okay. So what do we look for when we are looking at a downward market? We are entering short positions. We are selling. What does that mean? You are entering at a higher price range, exiting out on a lower price range, and you are taking the in-between profits. Okay, you are shorting the market. Okay, this is a bear market, market trending down, market going down, whatever you want to call it. The point is that we are looking to enter high, exit low. Okay, now I personally am a scalper. That means that I look for really small profits at a much smaller time frame. And the beauty of scalping, there are so many things that are awesome about scalping. The fact that you're in and out of trades is also that you could look for immediate momentum. So what does that mean? Overall momentum is when you are obviously trending in one direction for a longer period of time, but you could have deeper corrections, right? And that is immediate momentum. So you could profit on a quick, smaller trend until it stops and then it changes direction on you. Okay, so that's what this looks like. Oops, hang on a second, guys. So when I'm scalping, I look for 1 point because I also scalp the E-minis. So that is the futures market. I go for 1 point. But if you have 10 contracts, do the math. 1 point is $50. So times 10, and you don't have to change to go longer for longer periods. It's the same trade. You're just loading up with a bigger lot. All right, so let's talk about the trader's worst enemy. Okay, guys, once you recognize this, I can guarantee you it will change your entire trading. And it is not complicated. It is a really simple way to understand it. What is it? It is a consolidating market. It is a channel. It is when the market is bouncing in between two areas. It is when it is an uncertain area, right? So the question is really, why do we end up losing so much of our money during this particular type of a market? Why do we lose money in the sideways market? It's really easy. Why? Because we become emotional traders during this time. Trading is an emotional game, but the more that you can understand and stay out of emotional moves, the better you will be. What does that mean? It means that you are telling yourselves stories when you are seeing these things. Look, there are two types of traders out there. I don't care if there's a million traders out there, but they all fall into two categories. One is the trend is your friend type of a trader, right? I'm sure you're sitting and thinking, oh, that's me. Great. It's nothing wrong with that. But this is what happens with the trend is your friend kind of a trader sees a consolidating area. They spot it and they're like, well, you know what? The market's been trending up the whole day. I'm going to continue going long. The other category is the contrarian trader, and I used to fall into that particular zone. What does that mean? It means that when you're seeing this, you're saying to yourself, you know what, the market's been trending up too long, it's going to correct, I'm going for a short. The reality of both of these, neither one of them is true. Those are stories, those are emotional stories that you're telling yourselves. They are not true. Okay, why? Because the market is going to do what the market is going to do. And what is the market doing? It's going flat. It's a flat line. It has no direction at all. And you cannot pretend to understand what direction it's going to give you. Okay, it's really important. You cannot pretend that you understand. What you do need to know as a professional trader is that there are three specific positions that you need to do in trading to work with the market. Number one, know when to get into the market. Number two, know when to get out of the market. And number three, and the most important, I truly believe this is the most important one, is knowing when to stay out of the market. And when you see this, you stay out. Cash is king, guys. Do not guess. Do not create stories. Okay? You're heading down, consolidating market. Just because it's been going down does not mean it's going to continue. It can totally transition. And boom, it changed direction. Do you want to be on the wrong side of the market? No. You could also have smaller consolidations. Like I said earlier, I am a scalper. To me, this is a big one because I could be totally stopped out. I'm not going for big ones. I go for this box size trade, right? I will be stopped out. And these happen a lot. You could have breakouts, enter, and then it could go into another one. But you can, if you're not seeing in this or understanding when these are happening, you will be missing out on amazing trade setups such as breakouts and transition, right? So you need to understand this. This is going sideways. There is no direction here. Why do you want to risk it? Why do you want to give your hard-earned money to a market that is going nowhere? Now, you're sitting here thinking, okay, great, but how do I spot it? How do I know when they actually happen? Here's the thing, guys. The market respects areas. It respects areas, it revisits areas, and you as a professional trader, your job is to do the same. You need to respect them as well. Those areas are support and resistance areas. To me, support and resistance areas are my safety gear. They are, I do not ever just mentally put them in. I draw them in all the time. It's literally the same as, I'm going to give you a good example. Back to the Formula One example. Formula One drivers know they have 25% chance of being in a horrible accident or even worse, a fatality. This is the known statistic of Formula One drivers. So when they get into their car with that statistic, do you think they're just gonna get in and go? No way. They first have their helmet on. They have a fireproof uniform on. They put on their seatbelt, right? Who would ever get into a car, even a normal one today, without a seatbelt? It's outrageous. You would never do that, right? Yet trading is 5% winners. 5%. That means 95% of a chance of you losing. Yet nobody puts on their safety gear. Why? Because we believe that we can outsmart the market, and that is a lie. So you need to work with the market. You need to put on your safety gear. Draw in your areas. Draw them in, because this will protect you, because the market revisits them, and if it hits it over and over again, it will protect you from getting into bad trades. So what are these areas? We have the resistance area. You need to draw this area in. What is the resistance area? It is the ceiling of the market. It is the ceiling of the market. It is where the market is hitting over and over and over again 4 or more times. You need to draw this in. Okay, this is a resistance area. I'm a scalper. I only go into the market for about 30 minutes to maybe an hour. So this here is an entire session. And look at that. It would hit that area again and again. Do I want to be entering a resistance area that's showing me that it's really strong? No, I have it drawn in. I am ready for it. Resistance areas, you need to draw them in. What is a support area? It's the exact opposite. It is where the market is hitting the floor over and over and over again. It can definitely stop the trend. It certainly pauses it for a long time, and it can either transition or it could do a breakout. Two of the top trades you could take. But if you do not have this drawn in, how are you going to know that it's there? Mental support resistance areas is literally like putting on a mental seatbelt, saying that you'll be able to protect yourself when the car crashes. It's a lie. Start drawing these in, guys. Every single charting platform has a drawing tool. I don't care if it's a rectangle or if it's a line, whatever it is, you need to have this drawn in. Okay, you need to know where these support areas happen. So here it is. This is where it looks like. This is a channel. This is where that consolidating area is forming. You have these areas drawn in. You are ready for that breakout or a transition. But if you don't have these drawn in, you are going to miss them all. And worse, you're going to end up losing money. Do you want to lose money? No, it could be completely avoidable, right? Look at this. Look at this. Even though it's a little bit wide, look how ugly it is. Do you really want to be in this completely erratic, choppy, grindy behavior? Look at this mess. It's horrible, right? Absolutely horrible. Look at that. So you need to know where these happen so you can prevent yourself from it happening, okay? Sorry. Now, how do we spot when they are first happening? How do we spot when they first happen? This is the beauty of understanding market language. Like I said before, the market, it speaks to us. It literally talks to us. It is telling us what is happening. And the best way to understand it is listening to it. Reversal areas and divergences. This is the trader's map to the shift of direction and a trend. What are they? Double tops, triple tops, double bottoms, triple bottoms, head and shoulders. Guys, the coolest thing of all is they are free. Free. So many times we get wrapped up in the idea that we want to spend money on softwares, indicators, buying all these little gadgets. They're unnecessary. All right. So what are reversal patterns? Triple tops. This is screaming to you, slow down. There's a huge potential, over 90% potential that it's either going to transition or completely go into a sideways market. You never want to be in a market that is only 10% winnable, right? So when you see these reversal patterns, you'll see that this works. How do I know it's 90%? Because I backtest. I backtest everything. And if you guys are not backtesting, I recommend you quitting right now. Stopping right now because you're not in the game. What is backtesting? It's testing to see which trades, and it's not trading days, it's which specific trades work over and over and over again and seeing which ones are giving you the highest probability of wins. Okay? Reversal patterns, guys. These are everything. Oops, hang on one second. All right, reversal patterns. You have to understand when they happen. Okay? Triple, it starts with a double top, triple top. Look at this beautiful double bottom. Now, what is divergence? So as you can see here, I am heading down, right? The pivots are going down, but look at here. My MACDs are slowing down. It is telling me that I am about to have a slowdown, losing strength, or even a very high potential of transition in the trend. So what's going on here? Look at that. Massive incline, massive divergence. And then on top of that, I have a double bottom. Forget it. I don't touch the market. Look at that. Massive divergence. And again here, all I have to see is, look at this right here. Divergence. It's flat. You need to understand what divergence is because that will be your best friend. Absolutely. Your absolute best friend. Now, let's put this all together so that we could go into the live market and I could really show you how we use it there. Everything I just went through and a lot more is in makingofadaytrader.com. Makingofadaytrader.com. Go here, makingofadaytrader.com. You will get the entire presentation I'm giving to you right now so that you can go over it when you get the replay as well. And it just makes so much more sense. And it's literally the cheat sheet that I use for my own trading. All right, now we've been talking about breakouts, right? I mentioned breakouts quite a lot of times. So breakouts, we all know, is probably one of the most powerful trades out there. But how do we know when it's happening? How do we know when the breakout is actually happening? Yes, the divergence is from the MACDs with my price action. Okay, that's when divergence is. So what is a breakout trade? So look at it like this. I'm going to explain it to you really simply. You live here. This is where you live, right here. Your best friend calls you up and says, hey, come on over. I'm having a little get together. You hop in your car and you start to go north because your best friend lives up here. So you hop in your car, you're full of energy, you're full of confidence, you know this road, you've been on this highway a gazillion times, you're driving, but all of a sudden there's this huge, massive construction site. And the construction worker is telling you, you gotta get off, you gotta take a detour. Now you are off the road. I don't know about you guys, but I freak out. I freak out, right? Why? One is Google or Waze does not have that information just yet because it's a new construction site. Number two, detour signs are known to be forgotten to go to the end. So what if they stop showing detour signs? I'm in an area that I do not have any idea where I'm going. What if I'm in a bad area? What if they decide that they cannot fix the road and I have to turn back and now I'm stuck in this area that I don't have a clue where I'm going? The point is, I am completely uncertain. I am in doubt, right? I am not full of confidence. Do you want to be putting money in when you're feeling that doubt and lack of confidence? No, yet somehow people seem to think that they can outsmart that, right? But when you don't have a clue what's going on. But all of a sudden, the construction worker is like, okay, the highway's open again. Get on it. It's the highway that you know super well. You are full of energy, and that's the breakout. And you're back on the highway with that extra confidence. That is a breakout trade. Okay? That is a breakout trade. Do you see here? You're here, you're headed to your friend's house. Boom, massive construction site. Look at this uncertainty. Do you want to be in here? No. Boom, you're open up and you're driving again. That breakout. All right, the breakout setup. So I want to show you how I use it with my MACDs. Here is the resistance area that I've drawn out. And look at this, totally flat. The MACDs are really simple indicator. This dashed line, that's the zero line. That shows that the market has no energy, no strength at all, right? So when it goes this high, that's showing me a lot of strength in that direction. Boom, it just broke out, massive, massive movement here. No divergence. I use my EMA lines to take my trades from, right? It's just like an archer. Instead of walking around aimlessly on a field, they stand from a very specific area, correct? And they shoot their arrow from there. So this is how I take my breakout trades. Now, I want to show you another one. I keep on talking about the other powerful trade is that transition trade. I call it the initial reaction trade setup because it happens on the transition of a trend. Here we have a significant resistance area. And at this point, it's been kind of flat, but finally it broke out. Boom. Look at that massive, massive, massive strength. Again, if you don't have this drawn in, you're not watching your MACDs, how are you going to be able to find it? All right, guys, makingofadaytrader.com. Go here. You can get the entire presentation. All right, I have a question from Andrew. What charts and brokerage firms is great for Canadians to use? Pretty much the majority of charts that I know, MetaTrader, NinjaTrader, TradingView, there's so many different ones. As far as for Canadian use, if you could email me, Andrew, I have a really great Canadian broker that a lot of my students use. So you could email me at thetraderchick@gmail.com and I'll be happy to send that information to you. Okay. What time frame were you looking at to use? So Matt, I'm now going to be heading into the live market, and I'm going to show you exactly what I use. Okay, so just remember, guys, makingofadaytrader.com. All right, guys, let's go into some live analysis here. Okay, so here I am. Like I mentioned earlier, I am an ES mini trader. So I trade the futures. This is my chart. So it's really important to understand, Matt, that my time frame is a tick chart. Okay, I don't use 1 minute or 5 minute charts. I use tick charts. Why? Why do I use tick charts? I love tick charts. As you can see here, my charts are super clean, super simple to follow, right? Because I like simplicity. So right here, you could see I use a candlestick, and you can see here the ticks. So what is a 610 tick chart? For each candle, I could see in real time the volatility. It is telling me the 610 transactions are happening. If it's moving fast, I know that there is a lot of volatility happening. I do not need the volume indicator. The volume indicator is usually a lagging indicator. So I personally use the tick chart. And once you have the tick chart, all your other indicators work with that particular time frame, because ticks are the time frame. Okay, so my MACDs work with this. So this is it. So another thing that I just want to show you really quickly for my MACDs, I don't know if any of you guys actually use MACDs. The thing is, when you sign up for the MACDs, again, this is on every charting software. Please do not buy anything extra. But normally you get MACDs, and they come with 3 plots. The MACD itself, an average, and a difference. I personally do not care about the average or the difference. It is just white noise. So depending on your platform, you can make it transparent, or you can make it invisible, or you could just turn it off automatic altogether to just have the MACDs. Okay, so my EMA lines, I use 3 EMA lines. I use the 20, the 52, and the 135. Okay, so now let's do a really quick analysis here. Here is a really significant, strong support area, right? You guys could understand that, right? Look at that support area. It's hit over and over and over again many times. And here we have a pretty significant resistance area, right? And again, these drawing tools are not a luxury. They are on every single platform. Okay, so here I have this significant resistance area. Boom, breakout. I've just gotten a breakout trade. I want to also show you something interesting here. Look at this. Without this area here, let's pretend this area doesn't exist. Look at that. We have a massive head and shoulders. I'm seeing this head and shoulders, and what is it telling me? Wait, there might be something going on. I'm already having right here, boom, and it transitions. You guys, it's all right here. The market speaks to us loudly. It tells us what it is doing, okay? And it is allowing us to truly understand that. So my areas are fully drawn in. And look here, look at this beautiful, beautiful breakout. Man, I mean, this is a gorgeous breakout setup right here, okay? So understanding that, and you don't even need anything other than this. Look how clean, and I use one chart. Only one chart. Okay, so what out here? I'm gonna just show you here, Tahun, and you could maybe do a screenshot. So here is my EMAs. I use the 52, the 20, the 135, and my MACDs are 12, 26, and 9. Super simple. Anywhere, you could use these anywhere. Okay, and this is how I read the market. That's it. It's not complicated, guys. That's the beauty of it. It's not complicated. Okay, and here's the thing, guys. We have everything we need to take action. Everything we need, right? We've watched the YouTube channels. We've sat in tons of these presentations. We've read books. But the real question is, and this is a real question, how do you know you're doing it right? How do you know if you're actually seeing and understanding the market as you are watching a YouTube channel and you want to put that strategy? How do you know you're doing it right? Right? All of this is great. The real question you're asking yourself is, how do I truly get started? And this isn't for beginners only. This is seasoned traders as well who have been trading for years but are still not consistent, right? I get asked all the time, how do I turn this around? How do I become profitable consistently? Because that's the goal, right? And to be honest with you, lacking full understanding of the basics can really be the turnaround, right? It's like getting into a car. Okay, today the majority of us drive cars. When we hop in the car, we don't need to remember that at one point we learned where is the gear shift, where is the accelerator, where is the clutch, where is the brake, how do I press on the clutch and the brake so that I don't stall, how do I release the clutch. These are basics, right? These are the basic things, but we started with a car. You cannot move forward if you don't understand these basics. And the funny thing is, when somebody's telling you put on your seatbelt, if you've never seen a seatbelt before, how would you know where it is even, right? To us today, we're like, well, of course I know where the seatbelt is, but at one point you did not. And the interesting thing about trading is, for some reason, the basics, reversal areas, divergences, understanding sideways markets, those are basics. And a lot of times we're not taught these basics. And like I said to you, my sad truth is I spent over $20,000 on my training. I'm not joking, okay? And every time I brought up these basic questions, I was always like, in a condescending manner, was treated like I should know this information, or I should, how could I possibly not understand these things, and never actually explained. And I believe that the majority of traders go through that, especially when we're sitting in these live trade rooms, following these people who are showing us that there's trades happening, and you're not fully understanding why. Yet, for years, I struggled, lost tons and tons of money. And like I mentioned earlier, I lost over $4,000 because I didn't have those basics, right? And I ended up quitting. I literally walked away. I was completely defeated. It was horrible. It was the worst feeling ever. But as I mentioned before, I was bit by the trading bug. I was bit by the trading bug, and it never stops itching. And I can guarantee you the reason you guys are here is there itching you the same. And why does it ever stop itching? Because deep down inside, we all know that we can do this. We know we are what they say is we're 2 millimeters away from success. And sometimes we turn away right before we hit that success, because we know deep down we could do this. We stick through it, and I'm glad that you do. But it's about getting back to the basics. And that's what I did. I got back to the basics. When I came back, after being away for almost 4 or 5 months, I got back to the basics. There's a really great saying, when in doubt, get back to the basics. I don't know if you guys know who John Wooden is. He was one of the most famous coaches in basketball ever. Unfortunately, he is dead now, and I didn't even start to know who he was until he already died many years later. And to be honest with you, he's like my internet or virtual kind of a guru, and I follow because I feel that we are so similar. This man literally has won over 88 championships, 10 NCAA competitions, and he has worked with superstars. I'm talking like the best of the best. Yet, every time they get to the season, the beginning of the season, when they start training again, he always starts from the basics, because he knows that is what's going to completely change the game. Tying your shoe, rolling up your socks, how to do a basic dribble. Because here's the deal, guys. I don't care what you know in trading, how much you think you might know, but if you don't know the super basic, if these guys are getting blisters because their shoes are not tied properly, or their shoe unties and falls off, guess what? They're sitting out. Doesn't matter how great they are, they have to sit out. So everything they know and put into practice isn't worthy of anything, because they have to sit out. If you don't have your basics down, you're not going to be able to get it right. So here's the deal, guys. I have a special offer for participants only. My introductory course was created for this. My boot camp for day trading. You could do it on any apparatus, iPad, any tablet, desktop, laptop, even your phone. This is the next step. Either it's your first step or your next step. This is the step. Here's what you guys get in the course. First of all, simplifying your day trading package altogether. I know that many people struggle with setting up their platforms and probably put it off and resist it. I go through that in 30 minutes. You are up and running. It took me over 5 months and nobody helping me 9 years ago when I first began. Now you could do it in 30 minutes. I help you all the way. Dissecting the markets, understanding the magic telltale signs, understanding reversal patterns, uptrends, sideways, downward trends. These things, they are super important. Understanding the telltale signs, really working with them. Having your safety gears support resistance areas and divergences, really understanding that. And the power and the mastery of the breakout trades, and also to avoid the fake out breakouts, because those could take your money. And you get unlimited access to the curriculum, which is priceless. Total value for all of this, $1,600. You get all of this, the framework, the movement, the anatomy, all of this, understanding the areas, the breakouts. And don't take my word for it. I have students all over the world. So this is not only for people in the US. I have students in Canada. I have students in Australia. I have students in Europe, Africa, Asia, all throughout, because day trading is for everybody. And that's the beauty of it. Here are some of my testimonials from some of my students. Here are that they are here, that I have helped them, back it up, consult them, amazing teacher. Okay, so let me share this with you guys. It's super important. Remember what I asked you in the beginning? How do you know you're doing this right? How do you know if you're getting it right? So here's the deal, guys. It's amazing that we completely accept the fact that athletes, top athletes, all work with coaches. All of them, right? We accept that. Yet for some reason, we believe that we could buck the system when it comes to really wanting to do something for real and not have a coach. So what I am doing on top of everything, I am giving you 1 month, one-on-month coaching. So you do not have to question or doubt, how do I know if I'm doing this right? 1 month mentorship with me, unlimited access to me. And on top of that, the best for last, that is included in here, you get 30 days membership in the live trade chat room. 30 days membership. Again, it's me. It is not, I do not have a team of people. It's me sitting with you in the live market, really assessing everything. The total value of this and implementing and analyzing the market, $2,600, but it's special only for the people today, only for you guys here live, $97. You could go right here, bootcampfordaytrading.com, bootcampfordaytrading.com. I normally charge $297 for this. You're getting 66% off this offer, $97. Here's the thing, guys. I could only take 25 students. Because of the mentorship, I could only take 25 students. So you go right here, $97. You can actually start for $59. Bootcampfordaytrading.com. Bootcampfordaytrading.com. Yes, it is one-on-one. We could do a phone, email, and on top of that, the live trade chat room that I have for right here. So bootcampfordaytrading.com. All right, guys, bootcampfordaytrading.com. Let me know if you have any questions, and I am so happy to work with you guys. Bootcampfordaytrading.com. Go here, because honestly, 1 month one-on-one with me alone is worth, it's priceless. It's thousands of dollars. Who else is offering you one-on-one for this kind of a price? Bootcampfordaytrading.com. Bootcampfordaytrading.com, guys. There are no hidden fees. This is it. What you get right here. Okay? No hidden fees. $97. Thank you so much, guys, for being here. I so appreciate you guys all being here and taking the time. And honestly, $97, that's less than a trade. Less than a trade. Seriously, for less than a trade, you will get unlimited access to my curriculum, to my coaching, and my chat room. So I'm looking forward to seeing you there, guys. Bootcampfordaytrading.com.
Good morning, everybody. This is David H. Smith for the Morgan Report. And I think we're going to have a pretty interesting show here this morning. Here's a little disclaimer, which we always have to start with. This is not investment advice. There's some assumptions about my talk this morning, and I believe that the right mix of metals, miners, and blockchain stocks are really the way to go in this sector going forward over the next 2 to 5 years. There's some strategies that you can pursue that will put you in the winning circle during this time. If you plan ahead, if you're patient, and if you execute your plan, you'll be able to maximize your gains and minimize the risk. There are two things you cannot afford to lose. This is true in any sector. You can't afford to lose your investable speculative funds, and you can't afford to lose your emotional capital. I call this psychological capital. If you get to the point where you're really tremendously emotional in the markets, like we've had the last few days, for example, you can end up overtrading or freezing in place or getting rid of good positions. And you can actually, even if with a very large account, a multi-million-dollar account, you can either run it into the ground or become immobile in your trading if you don't keep yourself calm, preferably more calm than the rest of the market participants. And I like the SAS motto, the Special Air Service in Great Britain, which is who dares wins. And I've modified that a little bit by saying who dares and prepares wins. This is the way you want to go with your own planning and execution of those plans. I think we are in a situation where the financial system globally is starting to crack, and this is going to play itself out over the next few years. And so you want to be on the winning side of that, or at least avoid most of the damage. Everybody's going to be losing something, but try not to lose so much that you can no longer be functional or participate. The sector sellout that we have been seeing here recently, this is actually something that takes place as a secondary low is established in the summer. This is a little more pronounced than the ones we've had in some of the most recent years, but you want to make sure that you don't have leveraged ETFs, which really go against you in a case like this in a big way. You want to avoid margin. You want to take profits, partial profits on plays that you see as running into resistance, because they will probably be the ones that get soft first during the current downturn. And you want to sometimes, if you feel that some of these plays are ones you want to hang on to rather than getting rid of all of them, then what you need to do is to keep a small position so that you have the ticker symbol and you don't have to look it up again. Plus, you can follow along its rise and fall to see how it's going when you had a larger position. These are things you want to consider, no matter how bullish or bearish you are on a stock. Don't try to do it all at one time, especially on buying tranches. And when you buy a third of what you want, let's say, into declining prices, hopefully, you'll be wishing for lower prices so you can buy another third. And this turns the psychology of market participation on its head, and this is what you want to consider doing. Don't be worried if the market gets to a point where it's overbought, because it can stay that way for a long time. The Dow did for 5 years. Don't wait for markets to answer before you act. If you have done your research and you feel comfortable, then start executing your position before it becomes obvious to everybody else. This is something that I think is something to be careful of on the green energy metals. Now this is something I don't know whether this is true or not. In other words, I don't know whether it's going to work, the energy saving, energy storage solutions that Forbes talks about. But these things come out and some of them become reality. So if you go all in on lithium or cobalt or something like this, and then something comes out that changes that metric where they don't use as much or they eliminate it altogether, you can have some pretty big losses. So be real careful about overweighting too much in the EV metals, except for copper and silver, which their own metrics point to substantially decreased supplies in relation to demand for some years going forward. Here is everything is flowing on companies big and small by ESG, environmental, social guidance strategy. These have to be addressed as issues before anything else, or the best project in the world may never get developed. And there are several of those right now on the board that are unlikely to be developed simply because the ESG is not aligned and the companies can't bring that about. David Morgan always recommends to get physical first when you are putting together a program, and the physical acts more as insurance than an investment, although if the metals rise as much as we feel that they will over the next several years, these will be big winners as well too. But this is, by having physical, you have liquid gold and silver that you can trade if you need to at any time, and you have something that will become more viable not only in terms of the price, but the premiums that go along with that if and when these metals prices start having more and more demand, which is the case globally now for both gold and silver. So be sure and get that first, even though now the premiums are higher than they were a couple of years ago. You still need to start by accumulating some physical first. Then after that, if you have money and risk, look at mining stocks, which can rise larger on a percentage basis, and because they represent more risk, but also more potential. I've been focusing the last 6 or 8 months. One of the areas I've been working on is the newfound gold area play, and there are several dozen companies that are involved in this. Some of a lot more potential than others. This one particular company that I hold shares in is called Newfound Gold, and they have had some very interesting gold drill results at relatively shallow depths. And the thinking is here on part of some of the geologists is that they have a very similar geology to what has been found in the Kirkland Lake property in Australia. And if that's the case, then this could become a very, very big area of gold play. And of the several dozen companies that are there now, I hold 3 or 4 in my own portfolio, one of which is Newfound Gold. Another interesting one that I follow and hold shares in is Novo Resources in Australia, which is believed to have a similar geologic footprint to what the projects in South Africa and Witwatersrand, and that could become a very, very big project over time. It's already producing metal now. Bob Moriarty wrote a very fascinating book called What Became of the Crow, Inside the Greatest Gold Discovery in History. I think you would find that interesting as an investor potentially, and also as someone who likes to read a novel based upon truth of what really happens and is happening. The scale of gold and silver to the debt outstanding, you can see here there's just no comparison. You can hardly see it on the left. And even compared to some of the big FANG stocks, the entire sector, they could buy that in a heartbeat, any one of those companies. It shows you just how small gold and silver are, and the global gold mining industry here in this regard. And so you can see it doesn't take much money at all to go into a sector like that to really make it boom. And that's where we're headed, I believe. We're in a big inflationary trend, reminiscent of the 1970s, although I think much more pronounced. Food is going up sharply, and it's going to continue. I don't think it's going to be transitory like the Fed thinks. I think it's going to be long-lasting. It could last for several years and become much more pronounced and informative to prices than most market participants believe right now. What I like to do, and I showed this slide on the last one I did, and people really responded to it, but how to go about collecting a lot of information on a number of different sources and companies effectively. When I find some particular YouTube video that I like to watch, I will, while I'm watching or listening to it, I'll look on the right-hand side here where they have a number of other choices. Oftentimes they're related to the choice I'm looking at, and sometimes I'll get ready to go to one of these right after I get done, or I'll hit save on it and send it to myself as an email, and I can watch it later. And this way I don't lose something that I'm really interested in, and I can cover a lot of research ground effectively, as opposed to looking for something that I lost that I wanted to see again, or missing something that is really important that I didn't see in the first place. And here I was looking at an interview by the Eagles, of course, a very famous rock group from the 1970s and 80s. Silver is the only metal on the board that has not achieved new all-time highs. It's stunning that that would be the one metal over all the others. It just points to you that when it really gets going, it's going to be something to behold. I don't think anybody alive today knows what the price of silver should be in relationship to the what's been going on with the short selling and the degradation of statistics and this type of thing. But I think we're about to find out, possibly as early as getting underway this fall. If you learn to fish in this sector, which is a metaphor, then you won't have any worries. So don't try to just copy the companies that the success magnets, that I call them, are involved in. Try to learn how they think. And learning is a process, not an event. It's a layered process. And to get started, go on YouTube, look at some of these interviews involving Eric Sprott or Robert Friedland or Pierre Lassonde, and you'll learn a lot from them. Learn how they think and try to think like they do in certain respects. Later on, I'll have a free report for you going through the Morgan report called the 4 Best of Breed Geologists that I wrote for the Prospector News a few months ago. I think you'll find it very informative and will help you get into the minds of some of the best geologists in the business, ones that I've learned a lot from and follow. Here's a book that David Morgan and I co-authored, Second Chance, How to Make and Keep Big Money from the, we could really call it in play now, motherlode of all gold and silver shockwaves. And this washout that we're seeing now, I believe, is setting the stage for this next big impulse leg up, which could be really quite profound and powerful. You should be working in your own trading to get to the point where you think only of the cut. You've done your research, you've followed the strategies that others are using that work, and you've chosen best of breed plays. And then you've looked at your own risk tolerance and the money that you have to invest. And then when you finally put that all together, you do your plan and then you execute your plan. And when you take your positions and when you offset them, you are thinking only of what's going on with regard to what you're doing, not all the other market noise. Japanese call it mind like water, misu no kokoro. Everything should be calm for you, just like this picture is, which reflects the sky in the bay below. I call this the demand subduction zone, where in process of the Earth's tectonic plates moving around, certain ones create a lot of stress and they push together till there's actually kind of an explosion. And this is a metaphor for gold, silver, copper, uranium, and blockchain supply demand tectonic plates. They're all operating on a similar situation with newfound demand, with limited supply, and with more and more market participants moving in with more money to move those prices in a big way. You can see copper here, how copper, silver, and gold share many of the same supply-demand metrics in terms of, new discoveries not being found, long lead times to develop new ones, and the ESG affecting all those decisions. You can see of all the copper deposits discovered in the last 30 years, 224 of them, only 16 were discovered in the last 10 years, almost nothing in the last few years, in spite of a lot of new money going into it. When these projects are discovered and delineated, it can take 10, 15, 20 years to get one into production. And all along the way, things can happen, such as country risk, ESG concerns that come up, can stymie or stop the development of a big project. And there are several that this has happened to. The most current ones going into it, which is a very large, very pure copper project, are Ivanhoe's Kamoa-Kakula and Kipushi projects in the DRC. And this is really going to be a big deal for copper. It's not going to address the copper supply at all, but it's going to help, and it's going to make a lot of money for the companies involved in it, even though it's in a high country risk area. But Ivanhoe is a company that has followed ESG for about 25 years. They were doing it before it was even called that, and they are in a position, even in these high country risk countries of South Africa and DRC, to do well, whereas probably few other companies on the earth could actually pull off something like this. You notice the decline in yield of the 7 primary silver companies out there. They down by about half. In other words, they did twice as much ore to get half as much silver. And this is kind of continuing in spite of 1 or 2 new companies going into production later this year or early next year. I call this the Asian silver demand vacuum cleaner, something similar for gold. Going into SGE, you can see that it has continued almost unremittingly for at least 5 to 6 years. It is set to continue. This is what happens when the price of silver moves in a big way. You can't just ramp it up because most of it comes from base metal plays. And this is where, even though more copper is going to be produced as we go forward, It's not going to be as much, I believe, as people think. And some of these copper plays, for example, the South Africa, the DRC play, I believe from what my research indicates that they don't have a large silver component there, unlike some other plays that are either in production now or that may come into production that have quite a bit of silver as base metal credits, so to speak, or reverse base metal credits of copper along with lead and zinc. So without a lot of new silver plays coming on board that have a lot of silver, it's got to be made up by the juniors, and they're struggling to find and develop new reserves themselves. Keith Neumeyer, First Majestic, believes that 2015 was the year of peak silver. And indeed, we've seen a global production of silver decline every year except one of those years through now, and it was a modest change in decline. So silver is less silver is being produced and more is being demanded through the investment sector. It's also an industrial metal, but the investment sector is becoming a big demand piece for the silver supply story. If you look at where silver could go at different ratios, it's tended to trade between 40 and 75 over the years. You can see here how this has gone on since 1980. When this silver move gets underway that we're looking at over the next few years, it could definitely go to 30 or 20 or 15 like it did in 1980 or even lower. And here's some price points if you see that in relationship to gold. If you look at $10,000 gold, which is fairly conservative because Jim Rickards and others talk about $16,000 gold. Pierre Lassonde has come out recently and project $20,000 to $25,000 per ounce gold. So we'll just take $10,000 gold. Look at what happens at these different ratios for silver. We believe that silver will hit 3 digits, and it could very well go and well beyond, let's say, $100 silver. It could go up to $100 to $200 or $300 silver on a big price spike. So this is the potential that silver has, making it such an asymmetric trade from where it is right today at below $26. I believe that between 26 and let's call it 30, between $30 and $49 silver will be volcanic tremors. And that's what's kind of going on now. Once you get above 50, I think what we're going to see is that we're going to have a pyroclastic eruption, an eruption of the price of physical silver, the premiums charged for it, the availability is going to be up in question for retail investors, and the mining stocks, the better ones especially, are going to go pyrotechnic as well on the upside. Jeff Clark has published and talked a lot in the space about silver and about gold. He writes with Mike Maloney at goldsilver.com. And this is an interesting comparative chart of silver in relationship to the 1980 peak. So you can see we've got a long ways to go, and we're going to exceed that peak in the next couple of years, I believe, well above $50, which is where it topped in January of 1980. Another thing is the gold stocks versus gold. Gold stocks are trading at a very low level in relationship to the price of gold, which, as you know, has been strong over the last 18 months. Even though it's in a correction now. And those gold stocks are going to catch up, which means they will offer more reward, which they should, in relationship to the gold price than they have for many years. Another thing is the gap between the juniors and the seniors. And that gap is very unusually large now. When it closes, the juniors are going to appreciate on a faster scale than the seniors. They'll both be moving up in tandem, but the gap will be closed. So if you choose good juniors, you're likely to make more on a percentage basis than you will holding good seniors. This has been going on for a while, this disconnect. And the old timers say the bigger the base, the greater the upside case. So that base of underperformance has been going on for a long time, which gives us a chance for the probability of a very massive upside enduring base that we haven't seen for a number of years. David Morgan has done a lot of research on this, and his research points to the fact that as much as 90% of the profit potential of the entire move comes during the last 10% in time of the entire bull run. And so that in the case of ours, assuming it started between 2000 and say 2003, the next 3 to 5 years, if that's where it takes place, would be when you would see returns even more massive than what we've seen for the last 20 years. This is pretty exciting. When you get to the point where you think the top is in and you've had these big moves, there's a good chance, and this has been shown to be true by Incrementum in their research, that the last 9 months you could see a doubling of where the price is during that last forum. So keep that in mind as we move down the road. When you think the top is in, it may not be. This is where you can get the 4 best of breed mining geologists essay that I wrote, gratis for the Prospector News by invitation. If you write to themorganreport.com, my free reports, you can get a PDF copy for your own edification written about it. And I'm quite proud of it. I've had a lot of comments, not only from the people who've read it, but also the people that I profiled. They're all very humble about it, and they think that they are, not quite as accomplished as I write, but I believe that they're even more so. For the Morgan Report over the last 18 months, I wrote a uranium campaign and the copper campaign, and they've both done very well for us. And what I tried to do, and people could, they could do this differently if they wanted, our subscribers, but I look at it as a secondary focus to the gold and silver miners play. That's our main focus. And so, but I think it's one that could earn quite a bit of money, and it's already done very well for us as it starts to build out. So what I did was to suggest, the relationship of the uranium bull market that's developing, and we seem to be starting in it now. Got hints of it last fall. My premise is, and I could be wrong on some of this, it could go longer than I think or higher than I think, but I want to be conservative, and I'd rather get out early rather than late because it's not my primary focus. I do intend to make significant money doing it, and so I'll take that money to buy more gold and silver stocks. I think that the run could be shorter than expected as new technologies bring more uranium out of the ground, let's say in 2 or 3 years than maybe 5 or 6 or 7 that people are planning on. If it's a left translated top profit situation, in other words, if the boom, the all-time top hits on the left side of the curve rather than the right side, I'd rather get out early on that, maybe even before the top, and try to play around when the top is in, and then you have a period of time with sideways action that can be profitable, but it's a lot harder to earn big money during that time than it is during the frenetic, over the top, so to speak, performance where everybody's trying to get in. And I think that boom versus echo that Marion Katusa talks about in these bull markets is something to be really respected. So I have chosen, out of about 4 dozen stocks in the sector, I've chosen 3 to 5 to hold on to. And when they get to a point that I think they've achieved a lot of gains that are there in relation to risk, I want to sell most, a couple of them, sell them all together, and a couple hold a portion of them in the STP positioning that we talk about in Second Chance, the sacrifice throw portfolio, which I think gives a person not only in the uranium stock, but copper, silver, and gold stocks a chance to keep most of their money and get out before or during a topping process, and keep some of it keep a position in case the market goes a lot farther than you thought. But there's a couple things that you have to be willing to follow in that scenario, which we discuss in Second Chance, the book, which will help you, I think, be unlike most people, which will give back most or all that they earn when the bull market inevitably ends, whether it's 2, 3, 5, 10 years down the line. It's not going to go on forever. So this is a very potent strategy, and I think can help a great deal. Myself, as well as people that read my writings and those of the Morgan Report with David Morgan and others. Here is the uranium bull getting underway that you can see here going on. And you can see where it topped out in 2008 at about $140 a pound. Now, we may top out at 90 or 110. I think 110 is very likely in that general area. And we could see it blow off to 150 or 200. We just don't know. But I'm playing it a little more conservatively than some people may feel, but none of us knows the future. So we just work on probabilities. Here's a company that is actually a privately traded company. It has it's an amalgam of 3 companies, 2 of which we have covered in the Morgan report and which we actually hold shares in. It's called Group 11. I call it a virtuous production cycle where they're working to use a reagent that is non-toxic to get uranium out of the ground. It's called in situ recovery, on-site recovery, and it's working for gold and silver and may work for copper. And it's a private partnership between what's EnviroLeach, which is going to be renamed, I believe, EnviroMethyl soon, and Encore Energy, which is focused on uranium, and Golden Predator, which is has gold properties in Yukon. And so these 3 companies are doing research and contributing money to do the research on that. The most recent development that I'm aware of with Group 11 is a project they're working on which has a variety of gold type strata, and it's called the Rattlesnake Project in Wyoming. And they're working at seeing how the reagent work goes about getting gold out of the ground in a recyclable fashion. And this is not like fracking. This is water in solution that can be reused. And about the only thing you lose is the evaporation that takes place when it's out of the ground. So this could be very fascinating. It'll take some years to build out, but it has the potential to really change the mining industry beyond what kind of on a big way like cyanide did from the 1970s on. Instead of having open pits for many of the gold projects and silver projects, there'll just be some pipes in the ground to retrieve the metal, and once it's done, those go away. So quite a bit of a different environmental footprint, to say the least. Here's how the in situ recovery works. You can see what's going on there, and this is a visual complements of Encore Energy. I have written for over 2 years called Blockchain Brief for the Morgan Report, where we follow happenings each month in the blockchain space, not just with Bitcoin and Ethereum, but with the whole blockchain space, which is decentralized finance, which is changing already in a big way, and it's going to continue to change the face of financing for all of us in just about every respect going forward. And so, of course, Bitcoin gets an awful lot of the space out there on YouTube and whatnot of different people talking about it. And they talk about Bitcoin replacing gold. I don't think that's going to happen. I think Bitcoin is a partner of gold, and it does certain things better than gold, and there's certain things not so good as gold. And so look at it as both, but they both involve the possibility of private or semi-private money and finances. And just if you want to have privacy, it doesn't mean you want to be a criminal. If you don't have privacy, you don't have freedom. Think about that. And we've lost a lot of privacy going forward. And so gold and Bitcoin, and Bitcoin is kind of a metaphor for some of the other cryptocurrencies like Ethereum. These have use cases, but that are all kind of important. And I think there's something like between 4,000 and 8,000 cryptocurrencies out there. Most of them are worthless, and they will go to zero if they haven't already. But a handful of them, just like during the tech boom, a handful survived, like the Amazons and the Microsofts going forward, and the Facebooks. And those are the ones you want to try to find and hang on to, because we're in that curve now of public acceptance getting underway, which still has a long ways to go, even with the 50% decline we've seen in Bitcoin, for example, this year, which is quite shocking. But it started out below 10,000 last year, and it's still at 30,000. So we'll see where it goes. Take a look at what was billed as a great debate between Michael Saylor and Frank Giustra. Daniela Camboni is the moderator for that, for Stansberry, and it's a wonderful point-counterpoint. The two people, these are two of the big guns on either side of this debate. They debate each other respectfully. They've both been and done. They're really experts in their fields. And to listen to both of them, it's an opportunity for you to learn from them, as I did. I've listened to it several times. All of the Bitcoin that has been mined this year has been bought just by PayPal and Square. So if the other miners, the digital miners, decide to hold on to their Bitcoin, which could well be the case if the price strengthens, there may be a real limited amount of new Bitcoin coming out there for whoever wants to get involved with it. There are 2.5 billion people that are unbanked, and they're not ever going to have a bank account. They don't even need one now with blockchain, because many of them are going to be able to do much of what they need to do with their cell phone. And so this is the type of market that the altcoins are addressing, and there are several dozen attempts using gold and silver to be involved in that, and most of them have not done too well. Some have gone under. Some of them are just storage systems, but the one that we follow, that we like more than any that we know of, is called the Load Cryptographic Silver and now Gold Project. We're involved with it. We've reported on it for about 4 years, almost since its inception. We've invested in it. Many of our subscribers hold positions in the Load Project, and it's something that you might really like to look at. You can learn so much about it by going to ag.lode.lone and studying it, the FAQs there, or talking with people on the chat, or looking at the white paper that's written about it. It's now AGX, the silver-backed digital coin, is now even traded on hotbit.io. So it's got liquidity in that regard, but it has multiple use cases. It can be used to buy things by participating merchants. It can be used as a speculation on silver to hold on to it, because you buy the coins and they're backed by physical silver, and you have a claim to that silver, and it's stored in 7 or 8 vaults around the world. And you pay one time to get that coin, a particular amount of silver, through which pays for storage and insurance and the cost of silver. And it's not an ongoing charge like it is if you have store silver somewhere or gold, and you're billed quarterly for it. And if the price goes up, you bill more. So this is a very fascinating subject, and I encourage you to look into it and see if it might be a fit for you. I think it's going to become a really big factor going forward, something that the supply side of silver is not factoring in at all. We'll see how big it becomes. So it's gold-backed and silver-backed digital coins. Own it, hold it, spend it. Very, very fascinating. Load Pay is where a lot of people now are using this to buy and sell products through participating merchants, and those numbers that are coming online are very rapidly advancing, not only in terms of the numbers of participating merchants, but also the people involved in that. There are ways to earn good interest on your altcoins. I profiled BlockFi last year for the Morgan Report. I have an account there. I did a test account for 6 or 8 months before I even wrote about it, and you can earn your interest in Ethereum or in BlockFi or in USD, which is, they have a stable coin, GUSD. So instead of earning 0.1% interest on the money that you have in your money market fund, you can do this and accept a little bit more risk because it's not federally insured, but it's financial services, and then you can earn quite a bit of interest. So look into that. They now are coming out right now. They're launching a card that actually pays rewards. It's kind of a Visa type card that pays rewards in Bitcoin. So I'm waiting to get mine. I'm very excited about it, and I'm going to be excited to see how it works. I call this from ripples to shockwaves. It's a play on XRP, which is an altcoin which has done very well for transfer payments and sending payments to Mexico. It's my understanding that last year, 10% of the transfer payments from workers in U.S. to Mexico, which, by the way, is the largest source of income for the country of Mexico, 10% of that went through Ripple, XRP. It's faster, it's cheaper. Instead of charging 7 to 10% for the transfer of the money to the people of Mexico, they do it online in the blockchain, and there's less risk of getting robbed when you pick up your money where it goes. You pick it up at a transfer station in the old way to do it through a Western Union or something. And since that time, also, we now have El Salvador, which is starting to accept Bitcoin as parallel currency to the U.S. dollar, which they use there. And several other countries are considering doing it. Uruguay is talking about it, and maybe others will follow suit. So this is a pretty big deal. We'll see how it builds out. And Bitcoin is becoming more and more of a green story because, for example, the El Salvador is going to be mining their Bitcoin by using the geothermal power from a volcano. So the old story that it takes so much energy that could be used for other things is less and less true. At least 2/3 of the Bitcoin now being mined is mined by the use of green energy or energy that would be lost if it wasn't used for something such as solar energy, which is hard to store. And even the flaring that takes place when oil is produced, the gas flaring that goes up in the sky, is now being utilized in some places to mine Bitcoin. So it's more and more green all the time. And I think this demand factor for example, like the Lode Silver project and other other type of projects is going to be something that will be something that surprises the market going forward in the supply-demand way. Keep learning about this. It's going to change all of our lives. There's some great videos here that you can, I've listed just a couple of them, but go in and get your feet wet in a small way. Keep learning about it. Read about the blockchain space, participate in some of these things, perhaps in the Lode project. Don't be like somebody that never got around to learning how to use email and now they can't do that. I mean, I know people like that, and it's kind of sad because you can't communicate with them very easily, and it's hard for them to buy and sell things. And everybody does stuff through Amazon now, as an example. So keep that in mind, that these things, and hang on to your psychological capital. Read Life After Google by George Gilder, who has, through his lifetime, has talked about things a decade before they happen, and he's been the same way here with what's going on now. This is my favorite picture of a copper deposit. Talk about rich. This is carbon replacement smelter-free copper, and a big discovery in Ecuador, which is being delineated now. They found over 22 kilometers. They found this copper that it's only about 20% of in the world is this way, where it doesn't even need to go to a smelter. So we'll see how that company builds out. You can find the name of it fairly easy by Googling it. We've talked about it and followed it for some time on the Morgan Report. Consider the Pareto Principle project positioning, which I first learned about. I've always known about Pareto Principle, where 20% of an effort on something gives you 80% of the results, but I never thought about it in relationship to my mining stocks. And when I heard Peter Groskopf talk about it a couple of years ago, I got to thinking about it, and I looked at my own portfolio, and I found that sure enough, 20% of my stocks were doing the biggest profit moves. And so what I adopted that in my own trading, and I overweighted in some of these stocks, and I've become a much more successful investor since doing it that way. And I have fewer stocks, and I've concentrated on the ones that I believe are the ones that will be the biggest earners to put most of my money in, and I think it's something that's worthy of your consideration. When you go against a trend like people are doing this week, talking about buying Bitcoin or talking about buying silver, you get a lot of blowback from people that are emotionally involved and have lost some of their psychological capital, and they chew on you. You have to be willing to step up to the trade, as this individual, Scott Melker, has been willing to do, and others, and David Morgan for sure on that, and myself, to say, hey, look, you have to go against your emotions if you want to buy low and sell high, rather than the other way around. David Morgan has a free letter that you can subscribe to. He has the Morgan Report with 2 levels, with premium subscription and with a mastermind for high net worth investors and people that want to be involved in seeing private placements and things like this. So I've been working with David for almost 2 decades now, and I hold a number of the plays that he suggested or that I've talked about, and I think it's something that you really should take a look at. And you can go get the free report here by using this methodology to get on and take a look at. And so I think we're moving into a period of time where the potential for the biggest gains during our lifetime is here, and not just in gold and silver, but the mining stocks and the blockchain story, the DeFi, all of these, and uranium and copper. I mean, it's just so fascinating. Within these sectors are a lot of targets, but you need to be informed. You need to understand yourself and your tolerance for risk and reward, and your goals and your time outline. Put all these things together, and you have the potential to do better than you could imagine. I remember Rick Rule talking a couple of years ago in the last physical conference I attended in Vancouver before the COVID dropped down, and there were I don't know, there were several hundred people in this room, and things were just getting underway with gold and silver bottoming at that point, and it had starting to run. And he said, if every one of you in here can't make $1 million in the next few years in the mining sector, then I'm going to be really surprised and something is wrong with your analysis. So these were ordinary investors, they weren't just hedge fund people. So consider this, every one of you, no matter how small your account might be now, you have the potential to do so much better than you imagine, but only if you get out there and do the work and listen to people that have been there and done that and get into their thinking shoes and listen to what David has to say every week. And you have the potential to change your life and maybe even create a legacy for your heirs. So I've enjoyed speaking with you today on this. I believe that there is a Q&A session that's coming up here with Anna, and when she turns that on, I'll be happy to speak with you for a while and answer the questions that I can, keeping in mind that I can't give individual financial advice such as commenting on a specific company or should I buy or sell it or something like that. But happy to talk to you and answer as best I can or point you in the direction of someone who can answer if I can't answer the question. So thank you so very much.
Hi, my name is Bob Iacchino. After 12 years developing a system which last year generated a 73.3% win rate and beat the S&P 500 by 254%, I've decided to share my story. I urge you to keep watching because I believe 2021 will be a crucial year for all of us. Rewind about 20 some odd years. I woke up that morning with a terrible headache. The pain was absolutely unbearable. And while I was on the verge of one of the biggest years of my trading career, there was just no way to focus through that kind of pain. I remember how my wife whispering in my ear, "Do you want to go to the hospital?" felt like a sledgehammer to the side of my head. A few hours later, after vomiting from pain, my wife rushed me to the hospital. A long afternoon of painful tests later, and nothing. Nobody could tell me what was wrong. They pumped my body with painkillers, scheduled an MRI, and sent me home. Fast forward to Easter weekend. My wife and I would drive to my mother's house to spend the day with her and my father. I woke up that morning and I couldn't see out of my left eye. It wasn't dark, but more as if someone placed like a white sheet of paper over the left side of my face. I kept it to myself, thinking it would just clear up. I was wrong. I knew the situation was far too serious for me to continue hiding it from my wife. Once I told her, she forced me to pull over and drove me to the nearest hospital. Just like last time, test after test showed nothing. This time though, they immediately sent me to get an MRI. And the following morning, my doctor said the scariest 5 words you'll ever hear. You have a brain tumor. It's very difficult to describe what you feel and what you go through when you hear those words. For me, the typical thoughts of family and friends and how much time I might have left flooded into my brain. But something else hit me as well. Work. My trading career had been moving along in big ways. From my early days on the CME, Chicago Mercantile Exchange trading floor, for working for Japan's 3rd largest brokerage house, to a new role at Smith Barney, who had just bought the brokerage house. My success to that point hinged on one thing, my brain. As you can probably imagine, it felt uniquely cruel that the thing I relied on the most was now literally in a position of killing me. I didn't know it at the time, but it was a blessing in disguise. I'm not going to bore you with the details now, but the important thing to know is the brain tumor devastated my pituitary gland. The pituitary gland is no larger than a pea, and it's often referred to as the master gland of the human body. One of its functions is to control what's known as the stress response. Harvard Medical School puts it this way: as the initial surge of epinephrine subsides, the hypothalamus activates the second component of the stress response system, known as the HPA axis. This network consists of the hypothalamus, the pituitary gland, and the adrenal glands. There's a very complicated neurobiological response your body goes through when confronted with fear or stress. In fact, this process literally alters how you behave. It's this process which makes some people freeze in the face of danger or jump into action. So what does that mean? Well, in a very real way, I have no physical sense of fear or stress. In other words, the biological changes which alter how you think and process information under stress no longer happen to me. Let's say you've been afraid of heights your entire life. Now imagine waking up one morning and being able to stand on the top of the Empire State Building without a care in the world? How would your behavior change from that point forward? What would you do knowing you wouldn't physically feel extreme stress or fear? Well, that's precisely what happened to me. Now, intellectually, I know if I'm in danger or not. But unlike most people, my body doesn't trigger the stress response when faced with stressful situations or emotions. What does this have to do with trading in the stock market? Well, if you're in the stock market, you fall into one of two groups. You either give into your emotions and follow the crowd, or you ignore the crowd and gain from others' fears. Everyone likes to think they're rational and dispassionate when it comes to trading. You've likely heard the advice of not getting emotional when it comes to trading. Whether by coincidence or not, my trading and investing success skyrocketed after my ordeal. And due to my own natural curiosity, I needed to find out why. I came across an interesting study out of MIT, which found a clear link between emotions and trading performance. The more intense the emotions, the worse the performance. And there's more. According to a popular trading platform, 80% of traders lose money in just 1 year, and the median loss is 36.3%. Here's another troubling fact. A North American Securities Administration Association survey concluded 70% of traders will lose nearly all of their money. You've likely heard legendary investor Warren Buffett once say, "Be fearful when others are greedy, and greedy when others are fearful." That's great advice, but most people can't do that. And in fact, it's not even your fault. Most people simply can't control the stress response and the biological chain of events which occur. The fact is, this neurobiological response happens automatically, and it alters the way you think. In most cases, this is a good thing. It's your natural fight or flight response. But when it comes to trading, it's completely harmful. Which is why over the last 28 years, I've been developing a system which removes the emotion on your part. Not only have I seen with my own eyes the danger of being too emotional with the markets, I've also experienced how much more successful I've been since my tumor. I began fully running this system with real subscribers back in March of 2020, and here's a quick snapshot of the results. Plus 18.97 in March, plus 4.51 in April, plus 3.98% in May, plus 3.81% in June, minus 3.4% in July, but plus 10.86% in August, minus 2.72 in September, and then again, plus 4.30 in October. Add to that, plus 7.15% in November, and plus 4.19% in December. That's a cumulative return of 62.79%, which is 254% higher than the SPY, which is the most actively traded ETF that tracks the S&P 500 index. Keep in mind, I'm not talking about theoretical backtesting like some people try to pass off as real results. These are the real published alerts and the results from the system. As you can see, we had 2 losing months, but the losses are small compared to the wins. That's how the system is designed to work. See, even though we have an over 70% win rate, the reality is all trading systems have some level of risk, and all systems generate losers. However, taking this emotionless approach, we've been able to keep the losses to a minimum. Even more important, I'll explain in just a minute how using this system will be even more important in the year 2021. This approach could transform your trading results and lead to life-changing results. And by results, I mean a greater than 70% win rate and beating the overall market by 2.5 times in 2020 alone. As I mentioned earlier, I started my career in 1992 as a phone clerk on the CME trading floor. I wasn't very good at it. I struggled in the early years, and I was a horrible trader when I first started. But then I started to gain confidence as I began to understand the markets better. Then in 1996, my brain tumor changed everything. It gave me, honestly, an unfair advantage because I was finally able to remove emotions from trading. For me, this was very much literal. Over the next decade, my career completely transformed. I went from the Chicago trading pits to some of the biggest banks and brokerage firms in the world. I worked at Smith Barney and at Germany's Commerzbank. I ran my own commodity pool at a Chicago-based trading firm. I was a principal and a member of the investment committee for a very successful hedge fund of funds. And the list goes on and on. I've also done over 2,000 interviews dealing with the markets, where you may have seen me on CNBC, Bloomberg, Fox Business, Yahoo Finance, TD Ameritrade, and so on. Through all of this, I discovered a very simple truth. Trading is hard. And anyone who tells you otherwise is being less than truthful. It can be an expensive roller coaster ride of emotions. When you're on a winning streak, you feel like you're on top of the world. But then you make a few bad decisions and it's all gone. Months of hard work and profits gone. Sometimes in just one day. I'm sure you've been there. It turns your stomach. You feel dumb, like a failure. Maybe your position was too big. Maybe you didn't cut your losses. Maybe you just held on and hoped the market would turn around. The bottom line is your emotions got in the way. It happens to everyone. Trading can be nerve-wracking, and sometimes it can get even worse. Take 2001, for example. At the time, I was running a trading desk for Commerzbank Futures. Back then, it was the third largest German bank in the world. The day started off as usual. I was on the CME trading floor with other traders, Peter Ori on my left, Paula on my right, when suddenly the phones lit up like a Christmas tree. Call after call came in, rapid fire, just one right after the other. The pit erupted into an almost deafening roar. This was something I was used to. Anytime a piece of news would happen, hit the wires, or the Fed would make an announcement, you'd get what I could only describe as pure pandemonium. I did what I normally did. I checked our positions and our clients' positions to make sure we weren't overexposed to whatever was causing this roar, then waited for it to die down. This time, though, it didn't die down. This wasn't typical. I looked up at the giant jumbotron on the trading floor and immediately knew this would not be my typical day. A hijacked plane smashed into the World Trade Center. It was September 11th. Then 15 minutes later, another plane crashed. About 45 minutes later, an announcement blasts through the PA system on the trading floor. The United States is under attack. We're told to evacuate, but the desk I was running had a large number of trades still open. I asked anyone with kids to leave and go home to their families. For everyone else, I let them know it was up to them to stay with me as we closed out these trades. But no matter what, I'd be the last one to go. As hard to believe as this may be, I wasn't afraid. I wasn't freaking out. I was very calm. And for the first time, but not for the last time, I remember thinking, thank God I had that brain tumor. I knew the gravity of the situation, but like I said before, I don't exactly feel the fear or stress, which is why I continued to manage the trades. And the last thing I did was to close a trade that I had opened that morning, which I wasn't supposed to do. You see, the rules of that particular system said we were supposed to hold that trade for 2 business days. But this was an unprecedented event in history, and I knew that the best thing to do when you have no data to go on was to eliminate the risk. Guess what? Turns out that trade was a huge winner, and my clients made more than 10 times the money they were supposed to make on that trade. I knew the trading floor was going to be shut down for 4 days, and we had no idea what was going to happen or when it was going to reopen. Doomsday thoughts ran through everyone's mind. Will there be a full-fledged invasion? Are we safe? Will the markets crash? Nobody knew. I learned a few things that day. First, news stories and unexpected events shock and scare people. It doesn't even have to be as big as a terror attack. The fact is, most people go into fight or flight mode quickly and easily. Second, I learned anything can happen at any time, even the impossible. Before 9/11, the general public was completely oblivious to the possibility of a terror attack of this scope on our soil. What's worse is, no one can accurately predict an event like this. So what do you do if you can't predict these events? How can you safely navigate the market without big losses? Despite all the craziness in the world, in the news, and in politics, how can you consistently beat the market without great stress, without typical hesitation, without constantly watching the market and living tick by tick? Is it even possible? Academic studies going back decades prove time and time again, active traders who watch the market tick by tick have a hard time making money. In fact, The opposite is generally true. They lose money, and over time, they tend to lose all their money. The evidence also shows following the crowd is a bad idea. A recent study makes the point obvious. It examined Robinhood traders from May 2018 until August 2020. It looked at events where traders crowded into specific stocks. The most recent example of this is the craziness around GameStop, ticker GME. What they found is prices usually spike, then reverse. Usually the reversals are extremely painful, and in the case of the Robinhood study, the reversals actually became negative returns. We don't chase things like GME because, number one, I don't really feel the great FOMO that other people do, thanks to my tumor. I know the value of sticking to the process, but also because we were around for pets.com in the crash of 1999-2000, we remember what the aftermath of these frenzies look like. Another study tracked 1,600 Brazilian day traders for a year and found that 97% of them lost money. 97%. In fact, only 1% of them earned more than the Brazilian minimum wage. There's more. A study in Taiwan used complete transaction data for the entire Taiwan stock market over a 15-year period. Their conclusion? Less than 1% of the day trading population is able to reliably make money trading. And don't think for a second that applies to the amateurs only. Academic studies overwhelmingly prove professional money managers underperform their benchmarks over a multi-year period. In fact, a staggering 85% of professionals fail to outperform. I could keep going, but you get the idea. Making money in the markets is hard, but it's not impossible. I've spent decades in this business, and I've had only 3 down years. Now, how did someone like me, the son of Italian immigrants from the west side of Chicago, succeed for so long while the vast majority of traders failed? For me, the answer is obvious. You need a system, a process. A trading system that can consistently beat the market, take emotions out of trading, and can survive the ups and downs of the news cycle and irrelevant events. I look for this type of system everywhere, but they're not just sitting on shelves at Target. What I was looking for wasn't available to regular people like you and me. Sure, Wall Street and big hedge funds have these tools, but not us. While I was at Smith Barney or Nico Securities and Commerzbank Futures, I had access to the best tools in the world, the best software money could buy, the types of systems you couldn't possibly imagine, but they were no longer available to me when I went off on my own. Have you ever felt like you just can't win? Well, you're 100% right. You can't win. And someone else who's much richer, much more connected, and much more powerful is winning day after day while the rest of us struggle and lose money. And the fact is, the playing field simply isn't level, not by a long shot. But that didn't stop me. It actually motivated me. I became obsessed, so I started building my system, and I did pretty well. But I couldn't do it all on my own. I needed help, and the help I needed was lurking inside the very hedge funds that I was looking to beat. After 8 years of relentless work on this emotionless system, I met a very special human being. Let's just call him Oz, the man behind the curtain. He went to Northwestern University, received a master's in electrical engineering. He's a math whiz, and he's an insomniac. During one of those sleepless nights, he created and patented a technology that helps to power red light traffic cameras. I hope that doesn't make you hate him. Later, I would learn he was the man who hedge funds actually hired to break their systems, literally. We met after Oz bought one of my courses and showed up at my live event at the University of Illinois. With around 100 people in the room from all over the country, he comes up to me just before lunch and says, "Hey, my name is Oz. I bought your course, and it's great, but I can make it better. Would you like to know how?" Now, a lot of people in my position would have likely ignored him. But not me, though. After the last session, I met up with him again to see how he could improve what I had developed. And sure enough, he actually did exactly that. The changes he made are technical, so I won't bore you. But I knew I had to partner up with him. I knew we'd develop the type of system I was after. What I didn't know back then was that was the start of what I now call the 10-stock system. My brain tumor. my 9/11 experience, meeting Oz. These events were random and unrelated, but all of them were needed to create the type of system I knew people like you and I needed. And remember, the criterion is simple. The system must consistently beat the market, take emotions out of trading, and survive the ups and downs of the news cycle and irrelevant events. Let's take that first point. The system must consistently beat the market. Take a look at the 2020 track record. I started sending alerts in March 2020, and we did as follows. Remember earlier when I told you we had 2 months last year showing losses? Well, the system is designed to be emotionless, so these losses didn't hurt us, not one bit. In fact, as you can see from the chart above, we beat the S&P by an astounding 254%. But what does that mean in real life with real money? Let's say you have a $25,000 portfolio. How does the 10 stock system compare with some of the other things you could have done in 2020? The first option is trading it on your own with no help. Could you have gotten lucky? Definitely. But study after study shows the more likely scenario is you would have taken on massive losses. In most cases, you would have lost it all trying to trade. And remember, that's not me saying it. It's MIT, popular platforms like Robinhood, even the North American Securities Administration Association saying it. In fact, according to the NASAA, there's a 70% chance you would have lost nearly all of your money. So please, even if you decide not to use my proprietary 10 stock system, do not go it alone. The risk is far too great. Now let's say you decided to put it in an S&P index fund like the SPY. You would have made $4,425 or 17.7%. And that's not bad. But had you used my 10 stock system, you would have made $15,698 or 62.8%. That's 254% more than the S&P, a 2.5 times return versus the S&P. Remember, it's the same $25,000 portfolio, but the difference in the gains is significant. And get this, you actually take on less risk using the 10 stock system than putting it into an index fund. Take January of 2021, for example. The 10 stock system returned 5.96%, while the S&P, after making new all-time highs, turned around and fell to finish the month down 1.5%. This is because we took profits all month long and had very little exposure to the downturn when it came. And they always come. And then we have the last option, which is do nothing. To me, this is probably the worst category. It gives you the illusion you're playing it safe, but you're not. The problem with the do nothing crowd is they think they're protected, but they are not. Why? Because their purchasing power is declining. In fact, it's getting obliterated. Take a look at the US money supply chart. The amount of dollars in checking accounts in the banking system exploded in 2020. It increased at the fastest rate in history. Now zoom in on November 2020. Do you see the jump of more than 1 trillion? That means inflation is around the corner. Frankly, it's already here and you just don't know it yet. See, the government tells you inflation is only about 1 to 2%. That's because the government's metrics for calculating real-world inflation are at best outdated, at worst a complete fraud. I can't believe I'm about to say this because I love this country. My father came here as a legal immigrant with a green card and became a citizen, worked hard, joined the middle class. I still believe it's the greatest country on earth and I consider myself a patriot. But the way our government portrays the level of inflation to the people reminds me of how deceitful China is with its people. So if you're in the do nothing crowd, you're in a really bad spot. You think you're saving your money, but you're not. You're letting it sit in a bank account and it's wasting away at an alarming rate. You can no longer stand on the sidelines. You have to act now because this situation is only going to get worse. Let me tell you what the 10 stock system is. The core portfolio never has more than 10 stocks. And with every alert, you get the entry points, price targets, and stop losses, and any adjustments we're recommending on any open trades. In other words, each trade has a defined risk. Why? Because this hits on the second point of the perfect system. the system must take emotions out of trading. Let me show you some recent examples. Take a look at Intel. In this example, we took our profits before the drop. We made 11%, while others might have lost over 20% if they held through the price drop. And we know by studying trader psychology, that's exactly what most people do. This is one of the major benefits of the 10 stock system. By following it, you take profits constantly and consistently. While other people could be down 50% in a crash, we could be up 30% because we limited the risk ahead of time and get out while everyone else keeps piling on losses. Another strategy we use to manage our losses is timing based on price action and stop loss adjustment. We get in and out of the trades within weeks, and we raise our stop losses when needed to protect capital. In a moment, you'll see why this is so powerful. That way, when we hit our profit targets, we get out and move on to the next trade. We don't look back and wonder if we could have made more because it's irrelevant and counterproductive. Remember, the key is to remove emotion, not give into it. The reverse is also true. If the stop loss gets hit, we don't watch to see if price recovers. We simply move on. Losses are part of the game. You should always expect them because it simply doesn't matter. As you saw from the chart earlier, our system gave us 2 losing months, and yet we beat the S&P by 254%. If you want to play this game, you will win and you will lose. And my job is for you to win more often than you lose. My system is designed to win roughly 70% of the time. The key is precise methodology combined with appropriate risk management. And based on our performance in 2020, I know this approach works extremely well. Something else to consider is that we generally look at over 4,000 stocks, and then we narrow it down through our proprietary process to about 100 to 200. And ultimately, we pick the best ones. This allows us to focus on the most profitable trades the market has to offer without wasting time with the losers. And since our hold times tend to be short, we're able to profit over and over again in a short period of time. Take a look at another trade we did in INTC, Intel, as an example. On March 18th, we got in at $45.50. We were out at $53.14 on March 24th, less than a week later. Intel kept going higher, but we do not care because we took our cash and allocated it to something else that was moving. Earlier, I talked about the timing strategy we use with the 10 stock system. Let me show you how powerful this is. Most people use a buy and hold strategy as a way of removing emotion from the equation. In theory, this makes sense, but in practice, it can actually be detrimental. Let's use these Intel trades as an example. As you saw, we traded Intel multiple times last year. But let's say that instead of trading using the 10 stock system's timing and stop loss strategies, you bought on January 1st and sold on December 31st. You'd be sitting on a 17.3% loss. Compare that to what the 10 stock system did with the Intel stock. Remember, this is the same company, Intel, as well as the same period of time. However, instead of buying and holding, we use the 10 stock system, and what you actually achieve is this. By simply following the system, you could have made a gain of 11.3%. But here's the kicker. Imagine we did this with multiple names over a full 12 months and annualize that 11.3% gain, and it becomes a 68% gain. In other words, we took what would have been a 17.3% loss and turned it into an annualized 68% gain. Can you see the power of combining this system of emotionless trading with timing and strategic stop losses? Let's look at another example, this time in Prudential. Take a look. We were in at $42.50 on March 18th and out at $54 on March 25th. Again, in a week for a quick 27.1% gain. Think about what that means. The only time your money can grow is when it's in the market. But the only time your hard-earned money is at risk is also when it's in the market. If you can pull a 27.1% gain out of the market in a week, that's an annualized return of 1,411%. But it gets even better. Had you gone with a buy and hold strategy like in the Intel example, you would have had a loss of 17% as shown here in this chart. Compare that to the 10 stock system where we traded in and out of Prudential twice last year with an average hold time of 75 days. And you get a whopping 142% annualized return. Simply taking profits and limiting losses, we took what would have been a 17% loss and turned it into a 142% annualized return. Of course, not every trade will be held for such a short period of time. Sometimes we'll see a trade where it makes sense to stay in a bit longer, more like a month or even more. Have a look at AMD, Advanced Micro Devices. We entered at $85 on November 20th and exited less than a month later on December 15th at $96.85 for a quick 13.9% gain. If you can pull a 13.9% gain out of the market in less than a month, that's an annualized return of 203%. Are you starting to see why the 10 stock system is able to beat the S&P and hand you hedge fund-like gains without having to constantly watch the markets? In the case of AMD, had you gone with a buy and hold approach, you would have done quite well. The total gain would have been an annualized return of 95%. We can all agree that's a great return, but using the 10 stock system, you would have more than doubled that gain. And what's even more impressive is all of this is done automatically for you without you having to think about it. Now take a look at Cisco. We got in on April 6th at $41.50 and got out a month later on May 5th at $40.95. As you can see, this was a loss of 1.3%. The momentum faltered and we continued to adjust our stop loss until we got stopped out for a small loss. And again, that's the beauty of the 10 stock system. We protect our downside. If we're up on a trade, we adjust our stop loss. We don't sit and watch our profits disappear. But then take a look at the very next trade, ARNA, Arena Pharmaceuticals. We entered at $51.25 on May 5th and exited on May 21st at $58, which handed us a 13.2% gain. On this trade, let's say you would have gone the buy and hold approach. Again, if you bought on January 1st and sold on December 31st, you would have achieved an impressive gain of 67.3%. Not bad at all. However, using the 10 stock system's timing and stop loss approach, we generated a 13.2% gain in less than 3 weeks. Annualized, that's a 300% gain. Another example we have from the system is EYE, National Vision Holdings. We entered at $31.50 on July 24th and exited on August 7th at $36.50 for a 15.9% gain. Had you bought EYE on January 1st and sold it on December 31st, you would have had a nice gain of 38.2%. Again, that's not bad at all. Following the 10 stock system though, we achieved a 15.9% gain in 2 weeks. That's an annualized 241% return. These are all real stocks traded with real money by our small group of members. And these are all real results. And since the goal is to be consistent over time and not take on more risk than necessary, the gains tend to be smaller. This is something I really need to stress. If these consistent winners week after week, month after month, and year after year bore you, then this is not for you. I need to state clearly, I'm not going to hand you the next GameStop. I have no interest in that type of trading. It's short-lived, irrational, nonsensical speculation, and that simply isn't what I do. Sure, it's fun when it's all going well, but eventually that crazy game of musical chairs come to an end. The music stops, as it always does, and the reversals are some of the most painful things I've seen. I've seen this movie before, and it's a horror story for most. Personally, I do think a small, very small portion of your capital should be in speculative trades, but that's not what most people do. What my 10 stock system does is simple. It wins consistently and with well-managed downside risk. The one drawback, if you can even call it that, is the individual stock gains are smaller. However, they add up to very big wins over time, as shown by the fact that the 10 stock system outperformed the S&P 500 by 254% last year. You may not know this, but the US stock market ended 2020 on all-time highs. Despite the pandemic, despite the shaky start to the year, it broke the prior all-time high record. Remember that study I mentioned earlier? Over 85% of professional money managers rarely outperform their benchmarks. What that means is the pros didn't beat the market. At the very best, barely kept up with it. The 10 stock system outperformed the market by a huge margin of 254%. Like I said before, if consistent wins just isn't for you, I hope you get some value out of what I've shared with you here, but we're not a good fit. However, if you understand massive home runs based on irrational speculation is extremely dangerous to your financial health and well-being, if you can see the value of consistently winning on your trades all year long, then continue to watch. Inside the 10 stock system, you'll get 2 to 8 trade alerts per month. The reason for the high level of activity is what I mentioned before. The wins are smaller, but we're increasing the timing of trades for bigger gains, which is why you get those 2 to 8 alerts per month. If you recall, my brain tumor destroyed my pituitary gland, and because of it, I have no physical reaction to stress or fear. I knew from that experience I needed to develop a system that mimics those same feelings for you. Now, I can't do anything, obviously, about your body's natural response to stress, and I certainly would never wish a brain tumor on anyone. But I came up with an ingenious way to experience little to no stress when following the trade alerts that I send you. How's that even possible? All the alerts are sent out at night. You don't have to watch the markets tick by tick wondering if you've made the right decision, and you won't be distracted by intraday craziness. Right before bedtime, which incidentally is the time when the least amount of stress hormones are in your body, you'll review the alert I've sent you, punch in a few numbers, enter your trade, and then when you sleep, with a peace of mind knowing your entire trade, the entire trade, position size, risk exposure, target, profit, etc., is already set. The only thing you have to do before the market opens is make sure you're not getting in below the stop price that we sent you in the alert. That's it. If there's anyone who knows the huge advantage you get by removing stress and emotions from trading, it's me. It's this edge that's given me a winning track record for at least 8 of the last 10 years. That's why the financial news shows always call me for interviews and feedback on the markets. Even as recently as August 21st, 2020, right in the middle of a pandemic, who did Yahoo News call? I truly believe sending you the alerts this way is how you win over and over again, by setting up the trade, the entire trade, before you go to sleep, and only checking it once in the morning, which allows you to go about your day without thinking or worrying about what the stock market is doing. Remember, the way I have you structure the trade, you'll know exactly when to get in and when to get out. Profits will be taken automatically. No need to stare at your screen all day long and run the chance of being emotional and having that get in the way. The downside risk is covered. You'll know ahead of time what your risk is. The upside profit potential is also covered. You won't have to wonder when to sell and take profits. Again, all of this is done automatically the night before when you follow the alert I'll send you. So in the evening, around 7 p.m. Eastern Time, you'll get an email which looks like this. Quick and easy. I'll tell you exactly what you need to do, and you'll have plenty of time to act. From the comfort of your own home, and in fact, so simple, you can even do it all on your phone. No need to even fire up your computer. Just a few clicks to enter the number of shares and your entry price, your profit target, and then let the market work for you. Remember, our profit targets are automatic. So when the profit target gets triggered, money is automatically deposited into your account. You don't do a thing. Imagine waking up with $5,000 in profits or even $10,000 and realizing you didn't have to be glued to your computer screen. You didn't have to experience the roller coaster madness of the markets. You did this without letting your stress and emotion get in the way. Another thing to keep in mind is that you'll always hear from me. Even if there's no changes to the portfolio on a given day, I'll still email you and let you know nothing's changing. This is white glove service, and I'll hold your hand every step of the way. And if you have any questions, if something doesn't make sense, ask me. I'll host a Q&A session to answer your questions about the service. Also, once a month, I'll give you my thoughts on the market and the economy. It's a quick read that will keep you informed. I also cover topics you might not read about in the Wall Street Journal or hear about in the mainstream financial media. I'm not going to sugarcoat anything, I'll tell you the truth. On top of that, you'll receive a portfolio update video from me every 2 weeks. I'm not the prettiest face on the planet, but every 2 weeks, I'll show up in your email looking like this. The most recent topics in my video have been the GameStop frenzy, as well as stimulus and that's effects on the markets. And finally, once per quarter, I'll review our performance. I'll look at our winners and our losers and summarize how we did compared to the S&P. As you might imagine, this type of service isn't cheap. Price is fair, it's certainly not cheap. The value of a lifetime subscription is about $10,000. The cost for a one-year membership is $3,000. Like I said, it's not cheap, but it's fair. As I mentioned earlier, if you used a $25,000 portfolio and followed our alerts for 2020, the 10 stock system could have made you $15,698. So really, you shouldn't overthink this. Here's why. The moment you become a member of the 10 stock system, you get access to a suite of life-changing, money-making resources and benefits. And that's no exaggeration, as we've seen here today from members like our current member, Alan. Hi, Bob. Closed my 50th trade today since being a member since March 23rd, 2020. Closed realized profits, $27,911.20. Average $3,488.90 per month. Appreciate all your efforts and mentorship. Alan. The 10 stock system members receive access to my entire portfolio of alerts with detailed buy up to prices, entry and exit prices. In the past, subscribers who followed these alerts have seen gains as high as 27.1%, 23.3%, 19.4%. That's enough to pay for the service. Remember, one of my biggest benefits of my 10 stock system of alerts is you get to take gains over and over. It allows you to take thousands of dollars and large percentage gains off the table and not worry about whether the value of your portfolio fluctuates. And don't forget the video updates I send out every 2 weeks. I never hide from you. I'm just not wired that way. I'll give you the good, the bad, and the ugly on the markets. If the system is signaling for us to back off, that's exactly what we'll do, and I'll tell you about it. Now, as the newest member of the 10 stock system, you'll be lined up to profit immediately. The first thing you'll get your hands on is my position size calculator training video, where we dive deep into one of the most important areas of trading. The topic can be quite boring, but if you've ever asked yourself how much or how little of a particular stock to buy, or if you're wondering what to do with the 2 to 8 alerts that you get from the 10 stock system, this is a video you'll want to watch. Truth is, at $3,000 a year, the 10 stock system is a steal. And while I don't know how long I'll keep the membership open, I can tell you I'm already planning the next price increase because frankly, $3,000 is simply too good. But today, you won't pay anywhere near that. And that's for 2 very important reasons. First, because you watched this far, I know you're serious about finally being one of those people who knows exactly what to do amid all the Wall Street craziness that scares the hell out of everyone else, without the dangerous ups and downs most traders go through. For this reason, I want to make it a complete no-brainer for you to join and take advantage of all the emotionless trading. And second, because this is the first time I've officially opened up the 10 stock system to a large group of new subscribers. Aside from the small circle of subscribers who have been profiting handsomely, this is the first time I've opened up access. For those 2 reasons, I'm going to offer you an incredible deal. I'm going to slash half off the yearly new membership fee. Instead of $3,000 for a very short time, you'll get a full year for half off. That's just $1,500. So today, you get access to hedge fund quality research, which allows you to profit without letting stress and emotions derail you. In other words, today only, and for a very short period of time, you'll get recommendations, guidance, and research into this market for around $28 per week. You see why I told you earlier not to overthink this, not to procrastinate? All you have to do is skip one night out at a restaurant per month, and that's enough to get you in front of these nightly alerts that can lead to very nice profits. Of course, not every trade is a winner, but with a 70% win rate, you'll have what I call profit windows more often than not. And those profit windows add up to very big gains, life-changing gains, where you potentially never have to worry about money again. You can add those restaurant visits back in and more. So when you become the newest member of the 10 stock system right now, you'll get to join for just $1,500 per year, a 50% discount. You get it for half off the regular price, which comes to a measly $28 a week. You should see an order button below this screen now. You'll be taken to a secure membership enrollment form where you can review the details of your offer and make sure it's the right offer for you. You get all the membership benefits discussed here, instant access to the position calculator training video, the core portfolio, nightly alerts with full instructions, video updates every 2 weeks, and detailed portfolio performance tracking. You'll get all of this for just $1,500, which is just $28 a week. Plus another bonus. If you sign up today, I will send you an additional set of trades. I call them high beta trades. These are often faster moving and can include currency and commodity ETFs that don't make it to our initial screen, but still not only have the opportunity to provide you with extra profit, but can move faster and often farther than our core trades. They are riskier, but because we control risk and still use responsible position sizing, they can be a powerful addition to any portfolio. Last year, our high beta trades had a slightly lower winning percentage, but a higher reward to risk and shorter hold times than our core portfolio did, resulting in higher annualized returns. High beta trades made a full 24% more profit on average per trade than the core trades did. These can really move. Remember, if you want a full breakdown, you can click on the button now. This is a very time-sensitive offer being made to you. And I can tell you, you may not see the 10-stock system again, ever. Don't put this off. Don't procrastinate. At just $28 a week for a short time only, this is truly a no-brainer. Thank you.